going to the city of the Lord. You're marching to Zion, the city of the Lord. You're marching to Zion. You're going to the city of the Lord. You're marching to Zion, the city of the Lord. Dumelanga ufela, dumelaria, dumedisa, dumelanga ufela. Omunzi onyayo, dumachita ufela, dumelaria, dumelanga ufela. Omunzi onyayo.
Jerusalem, 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 omunzi onyayo. Jerusalem, 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 omunzi onyayo. Jerusalem,
Jerusalem, omunzi onyayo.
Jerusalem, Jerusalem,
Jerusalem, Jerusalem, omunzi onyayo. Siyakutandazelela. Jerusalem,
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 omunzi onyayo.
Siyakutandazelela. Jerusalem,
Jerusalem,
Jerusalem, onyayo. Dumelanga ufela, dumelaria, dumedisa, dumelanga ufela. Omunzi onyayo. Dumelanga ufela, dumelaria, dumedisa, dumelanga ufela. Omunzi onyayo.
Amandla.
Bada, bada.
Shombo deri da bukanga, Shombo deri da bukanga. Hey,
Muhanani aduka kwenyanga agwe shombo sungu samarinda.
Shombo deri da bukanga, Shombo deri da bukanga. Hey,
Muhanani aduka
kwenyanga agwe
shombo sungu samarinda.
Namawa kawatora hunjira.
Hapana vunja kiti.
Namawa kawatora hunjira.
Namawa kawatora hunjira. Namawa kawatora hunjira. Singisa. Tingisa. Wa.
Namaru kawatora hunjira. Namaru kawatora hunjira.
Namaru kawatora hunjira. Namaru kawatora hunjira. Tingisa. Wa.
Tingisa. Uligwerwa.
Ng'ombe.
Uligwerwa.
Ng'ombe.
Uligwerwa.
Ng'ombe mulai wa mama. Ng'ombe.
Gonanga nimbara.
Ng'ombe.
Gonanga nimbara.
Ng'ombe.
Gonanga nimbara.
Ng'ombe mulai wa mama. Ng'ombe.
Uligwerwa.
Ng'ombe.
Uligwerwa.
Ng'ombe.
Uligwerwa.
Ng'ombe mulai wa mama. Ng'ombe.
Gonanga nimbara.
Ng'ombe.
Gonanga nimbara.
Ng'ombe.
Gonanga nimbara.
Mulai wa mama. Ng'ombe. Tingisa. Wa.
mulai mukosi muno. Omukana mulai mukosi muno. Shombo maalum ni shombo.
Shombo maalum ni shombo. Shombo maalum ni shombo.
Urikinga
Omukongo
Kirima
Omukongo
we
Omukongo
Hey
Omukongo Unaiwa mama Omukongo
Shombo maalum ni shombo.
Maalum ni shombo.
Katibu
Shombo maalum ni shombo.
Haya we
Ulikinga Omukongo.
Head down. Haluo muramu wanje. Muramu wanje oningire nguvo. Emuvo inde wana nige lugendo. Haluo mufwera wanje. Mufwera wanje oningire leso. Eleso inde hoya nige lugendo. Inde yabo ya mabega. Uvunika mahuru. Atiti sira lukendo. Enda yangandirenga. Aya, zunguka.
Kiriba.
Zunguka.
Kiriba.
Zunguka.
Kiriba.
Zunguka.
Wewe.
Hala. Hey.
Anachukua, anaweka.
Wa. Anachukua, anaweka. Wa. Yeah. Anachukua, anaweka. Wa. Thank you. Tuliagree kama mwezi imba mnapiga makofi tafadhali. Yes, now we want to welcome you here officially at Safari Park, and we have to do it at some point the Mount Kenya way.
Welcome. Aya. Hey. Welcome na wakinyagoko mosie sitaoni. Welcome na wakinyagoko mosie sitaoni. Welcome. 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 Welcome na wakinyagoko mosie sitaoni. Welcome na wakinyagoko mosie sitaoni. Welcome. 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 Welcome na wakinyagoko mosie sitaoni. Welcome na wakinyagoko mosie sitaoni. Welcome. 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 Welcome na wakinyagoko mosie sitaoni. Welcome na wakinyagoko mosie sitaoni. Turu turu tu botige hanini anyway. Hanini we. Tu 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 tu. Ae wawiri kwa wawiri homondo na moratawe. Ae wawiri kwa wawiri homondo na moratawe. Ae wawiri kwa wawiri homondo na moratawe. Ae toratare omondo na moratawe. Ae moikiro na wakuwe omondo na moratawe. Ae moikiro kwena koe omondo na moratawe ae moye akwae omondo na moratawe ae twede shini kwa shini omondo na moratawe shini kwa shini ae twede shini kwa shini omondo na moratawe shini kwa shini shini kwa shini aiya 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 kokone kwa wenda gwetemania wetemanie hae 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 Robin hae hae kokone kwa wenda gwetemania wetemanie hae 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 kokone gwito wenda gwetemania wetemanie hae 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 Levito kokone gwito wenda gwetemania wetemanie hae 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 hae
ngoja kwanza baba DJ inasemekana na mnajua maisha usaidi ndio kabisa kabisa. Welcome all of you our guests. Ni vile mmeingia mkaketi, mngecheza tungefurahi sana. Lakini tunataka kucheza moja ya Wakenya wazalendo, moja tu kabla tuendelee. DJ. Ni kushangilia Kenya. Na ukiweza ongeza mka, we just sing together. You don't need to dance, just do your feet.
Tusimame pamoja, tusimame pamoja. Daima ifale tutukufu Kenya tunayoipenda daima tunayoipenda daima tukijiita wa Kenya nchi yenye baraka daima tukijiita wa Kenya nchi yenye baraka daima Kenya nchi yenye baraka daima Kenya makao yetu ni nchi ya usalama kamwe hatutaiacha daima Kenya makao yetu ni nchi ya usalama kamwe hatutaiacha daima kamwe hatutaiacha daima anayependa Kenya ni yule mwenye kutenda haki kwa watu wote daima anayependa Kenya ni yule mwenye kutenda haki kwa watu wote daima haki kwa watu wote daima napenda Kenya ujitenge na mambo yenye kuvunja amani daima ukipenda Kenya ujitenge na mambo yenye kuvunja amani daima hatutaki matata Kenya daima hatutaki matata Kenya daima haya haya Kenya kipenzi chetu hatutaiacha milele milele Kenya kipenzi chetu hatutaiacha milele na milele chetu nchi yenye upendo hatutaiacha daima na milele Kenya kipenzi chetu hatutaiacha milele na milele Kenya kipenzi chetu hatutaiacha milele na milele. Tena ni baba yangu, hatutaiacha daima na milele. Kenya kipenzi chetu, hatutaiacha milele na milele. Kenya kipenzi chetu, hatutaiacha milele na milele. Hapa wote wananchi wa Kenya, kutumikia Kenya daima na milele. Kenya kipenzi chetu, hatutaiacha milele na milele. Kenya kipenzi chetu, hatutaiacha milele na milele. Haya, mimi ni mwana Kenya daima, nikienda ng'ambo nitarudi. Mimi ni mwana Kenya daima, sitadanganywa kamwe na wabaya. Mimi ni mwana Kenya daima, wala sitapotoshwa na wabaya. Mimi ni mwana Kenya daima, na nitajenga Kenya nchi yangu. Mimi ni mwana Kenya daima.
Kenya Power Pension Fund, maisha bora uzeeni.
Asante sana, makofi kwa Stima Choir. So we can settle, and that was a good session. Good morning, everyone. My name is Amos Nungu. I'm privileged to work for the trustees of Kenya Power Pension Fund. I'll be the MC for today, and I'll be assisted by my colleague, Joseph Mitito. Maybe Joseph, you can just wave at the members. So that will be my co-MC. And I think today is a good day. And before we go to the formal session, it would be good to familiarize ourselves with the room that we are in. I think this room has very many exits. And in case of an emergency, we pray for a good day. We have exits all over, and we just peacefully walk out in case of an emergency. For comfort rooms, we have some to my right and others at the back to my left, where we served our tea. So with that, we can now go to the formal part. DB Chairman, Mr. Samuel Dori, DC Chairman, Mr. Ernest Nadome, MD Kenya Power, Dr. Joseph Sirol, he'll be joining us shortly. We have our Board of Trustees, DB and DC. We also have our CEO and Trust Secretary, Mr. Edwin Ruto. You have our distinguished members. We have our service providers, both DB and DC. We have service providers and also secretaries. I'm Jambo. I welcome you to the 18th AGM. And with that, I think I'll welcome the ICT team to play the national anthem and the East Africa anthem, just one stanza. Then thereafter, we will have a prayer. ICT team. Maybe you can stand for the national anthem, kindly.
Amani
Thank you. Maybe you can have Madame Julia for the prayers. Let's continue standing up kindly. You can have a mic.
Let us pray. I'm going to pray the Father's prayer. Our Father who art in heaven, hallowed be thy name. Thy kingdom come. Thy will be done on earth as it is in heaven. Give us this day our daily bread, and forgive us our trespasses, as we forgive those who trespass against us. Lead us not into temptation, but deliver us from evil. Lord, we come unto you this morning. We thank you, Lord, for waking us up this morning. We pray for our fund. We pray for everybody who has come today. All the retirees, Father, all the delegates, everybody in this room. We pray, Father, you give us good time. We talk, we deliberate so many things, Father, and we love also our fund, Lord. We thank you, Father, because this day is your day. It's a day to remember many things. We also have those who left us, Lord, and we are here, Father, not that we are good, but, Lord, you are with us. We pray this prayer through Christ our Lord. Amen.
So thank you. We can have our seats. So members, I'm going to invite the DB chairman, Mr. Samuel Dori, to take us through the next session of the AGM. So karibu sana, chairman.
Yeah, kidogo huko upande. You're not getting me right. The screen. Yeah, because I want. Yes, I'm going to introduce you and I won't see. Or is it fixed? Leave it. It's fixed. Leave it, leave it, leave it. Leave it. Right. Ladies and gentlemen, welcome to our 18th General Annual Meeting of our DB scheme. Now, this year's AGM is a hybrid comprising of in-person as well as the ones online attendance. A quorum being present, I declare the meeting to be properly convened and duly constituted, and I take this opportunity to introduce to you my fellow trustees and the distinguished guests. Now, I'll start with the trustees. Yeah, they are supposed to be displayed there, so that people can see them. Okay? Karibu sana Bwana MD. I was looking for you. Yeah, we start with we have 3 constituents. We have we have got sponsor-nominated trustees, and we have got member-elected, and I'll define them as we go along. Member trustees are represented here by Dr. Engineer Joseph Siror. Can you raise your hand so that you can be seen? You are a new. Thank you. Engineer Albert Mugo. The others are not here. Sorry. We got Enes Nadome. Next. Imelda Bore. I don't think Cecilia is there, although she's, that is Cecilia Kalungu, but she's not here, but that's Cecilia. That is Stephen Bikero. Kosie Kolil. Tobias, you're not appearing. Just stand up. Vincent. Listen. Now, those three are not appearing because they are DC trustees, but since they are here, it's important that you know them. Now, our distinguished guests, our service providers, I would like also to introduce you. Are they going to appear here? Maybe. I see Richard Muriithi. Where are you? Sanlam. Dan Kachok. Karibu. Our custodians. Standard Chartered. Amos Ogang. Karibu. Stanbic. Nick. The old man. Karibu sana. Our auditors, Deloitte and Touch, John Mahalia. Retirement Benefit Authority, represented by Mr. Anthony Chumo, and Vione. Is Vione also there? Vione? She's coming, but she's not there. I now call upon the Secretary to read the notice convening the meeting.
Thank you, Chairman. So, Chairman of the DB scheme, Board of Trustees for both DB and DC, invited guests, ladies and gentlemen, good morning. I will read the notice of this annual general meeting, and it reads as follows. Notice is hereby given that the 18th annual general meeting of Kenya Power Pension Fund defined benefits will be held on Friday the 5th, July 2024, which is today, at Safari Park, Nairobi. And it will also be through Zoom webinar, and it will start at 9 a.m. The meeting is to transact the following business. Number 1, introductions and opening remarks. Number 2, reading of the notice convening this meeting, which is what I am doing. Number 3, confirmation of the minutes of the last year's AGM that was held on 23rd June 2023. Number 4, presentations of the chairman's report. Number 5, presentations of the fund's financial statements and audited accounts for the year ended 31st December 2023. Number 6, presentations of the fund manager's report. Number 7, presentations of the fund custodian's report. Number 8, address by the RBA representative. Number 9, question and answer sessions. Number 10, vote of thanks. And finally, number 11, closure of the meeting. This notice was issued on 10th of June, 2024, signed by E.K. Ruto, the Trust Secretary. Thank you, Mr. Chairman.
Thank you. Thank you, the Secretary. We are required by law to confirm the minutes of last year, and the minutes were available to members on 13 September 2023 and are taken as read. I now invite a proposer and a seconder to confirm the minutes. Who's going to propose them? Yes, Rosemary, you propose. Rosemary Gitonga is proposing. Who is seconding? Karibu.
Asante. I was actually one of those online on this very day, very close to Kakamega, and I wish to second the minutes. My name is George Mukoya.
Thank you. George has seconded the minutes, and the minutes now stand confirmed as per the law requirement. Right. Dear members, on behalf of the Board of Trustees, I am pleased to present the annual report and financial statement for the year ending 31st December 2023. Our quest to provide a world-class quality life in retirement for our members and beneficiaries still continues. Being the third year of our Fund 2021-2025 strategic plan, the fund continues to work tirelessly to serve its members and achieve a positive return, despite the challenging global and local business environment. Notwithstanding numerous challenges, 2023 saw a boost from economic recovery and easing inflationary pressure, with the country recording an average GDP growth of 5.6%. Headline inflation decreased to 6.6% from 9.1% in December last year. Currency, on the other hand, depreciated by 21% against the dollar over the year, making its largest annual drop since 1993. And this was due to the trade imbalances, global economic conditions, negative market speculations, and economic uncertainties. Overall, the board continues to play a central role in ensuring that our investments are well diversified to maximize return while managing risk, ultimately working to secure the financial well-being of our members and beneficiaries. At the end of 2023, the fund achieved a modest return of 1.7%, up from 0.7% reported in 2022. This was mainly due to the losses incurred in the stock market and the negative valuation of treasury bonds, occasioned by increasing interest rates. The fund value reduced from Kenya shillings 16.54 billion to 15.03 billion due to significant benefit payouts to retirees and adverse valuation in quoted equity and bonds. Notably, as a closed DB scheme, we do not receive any contribution, neither from the sponsor nor from members, while the number of retiring members continue to increase, thus hiking the benefits payable each year. Nevertheless, the Board of Trustees remains committed to investing available funds in a well-balanced portfolio that delivers good return to members while minimizing market volatility. Dear members, during the year under review, there were some legislative and regulatory changes introduced in the pension industry, and these were: 1, the RBA notice effective from December 21st, 2023, which outlined that the net return declared and credited to members' account will exclude unrealized gains and losses arising from changes in the valuation of the trust bonds. Number 2, on May 5th, 2023, the Retirement Benefit Authority, RBA, released guidelines on trustees' remuneration policy and scheme expenses. The objective of the guidelines is to establish a comprehensive framework for determining and approving trustees' remuneration and scheme expenses. The fund is currently reviewing these guidelines to determine how to operationalize the same. The fund continues to enhance its compliance and monitoring mechanism to ensure that all the changes required by RBA are adhered to. Ladies and gentlemen, effective governance has been the foundation of the fund's sustainability over the years. The fund adheres to sound governance practices and compliance with the various regulatory instruments, including the Retirement Benefit Guidelines of 2018. The board follows a comprehensive board manual that outlines best practices and procedures for producing its operational, for conducting its operations. Additionally, the board has established several committees, one of which is dedicated to governance and compliance oversight. The committee enables the board to monitor the fund's governance and compliance status quarterly. The board has implemented structures to delineate the operational responsibilities of the Secretariat from the governance duties of the Board of Trustees. The good performance consistently achieved by the fund is closely linked to the solid governance practices established by the board. For more details, kindly peruse through the shared annual accounts. In terms of board composition, I wish to inform members that during the year, the board welcomed 2 new trustees, namely Dr. Engineering Joseph Siror, who was appointed on 1st June 2023, and Engineer Albert Mugo, who was appointed on 1st August 2023 as nominees of the sponsor. We shall certainly leverage the experience to continue steering the fund towards posterity. The fund actively participates in both local and international awards, showcasing our commitment to excellence and innovation in the pension industry. Through these accolades, we continuously strive to set higher standards and drive a positive impact within the pension industry. In 2023, our mobile app was awarded the best in the pension category at the Mobile App Awards. Secondly, our property development brand, Sakile Property, also participated in the Real Estate 100 Award, as well as the Top Star Brands Awards. We were feted as the best pension fund in property investment for 2023 and best high-end properties developers, respectively. Tunimpigie makofi. Imekuwa ni bure. Ladies and gentlemen, looking ahead, the economy has already witnessed a recovery for the first half of the year, signaled by reducing interest rates, strengthening of the shilling, and rebound of the stock market. We are optimistic, however, that this recovery is expected to continue for the remaining half of the year. I would like to assure our members and beneficiaries that we are committed to enhancing our investment performance by leveraging our experience and adopting a proactive approach. Together, we will continue to build a robust and adaptable investment portfolio that aligns with our members' long-term financial goals. Dear members, I would now like to express my deepest gratitude to the Almighty God for giving us yet another successful year. To our members, we deeply value your trust and confidence in the fund, and we remain steadfast in our commitment to serving you with the excellence and integrity. To our able sponsor, I extend my appreciation for your unwavering support and commitment that has been instrumental in driving our success so far. We are deeply grateful for your ongoing dedication and partnership. I would also like to recognize my esteemed fellow board members whose support and expertise and guidance has been an integral part of our success. To the CEO, Trust Secretary, Secretariat, and all service providers, thank you very much for your dedication and commitment throughout the past challenging year. Your invaluable contribution have played a crucial role in our continued success and growth. Together, we will navigate the challenges ahead and seize the opportunity to achieve our shared goals. That should end my official speech, but yet I'm not done. Fellow members, I would now like to take this opportunity to report on two of the minimum agenda items as is required by law for annual general meeting of the fund. First, I would like to report on any changes to the benefits and contribution of the structure. Ladies and gentlemen, I wish to inform you that there have been no changes to the scheme benefit during the year 2022. That should be 2023. Number two, I wish to report on remuneration of During the year under review, the Board of Trustees had the following meetings. The full board meeting, we had 7. Risk and Audit Committee had 5. Strategy, Finance, and Investment Committee had 5. Governance, HR, that is Human Resources, Staff, and the Compensation Committee had 12. I wish to report that there were no changes in the remuneration levels of trustees during the year. The total trustee sitting allowance for the year was Kenya shillings 10.95 million. It is recommended that the existing remuneration levels be maintained in the subsequent period. The audited financial statements have been circulated previously, and I take them as read. I now take this opportunity to invite John Mahalia from Deloitte & Touche to give a brief overview of the financial statement and to take us through the auditor's report. Karibu hapa.
Morning, members. I'm John Muhalia from Deloitte & Touche, LLP, the independent auditors of Kenya Power Pension Fund, defined benefit. So I'll lead you to the annual financial statements report. On page 113 is the statement of changes in net assets available for benefits. So the net deficit from dealings with members, which is the benefits payables for the year, was 1.6 billion. The net returns on investments was 303 million, which resulted to a decrease in the net assets available for the year by 1.5 billion. I'll lead you to the subsequent page, which is page 114. So the value of the net assets of the scheme was standing at 15 billion as at 31st December 2023, which is represented by 14.6 billion, which are investments held. The others are the assets of 308 million. What is other current assets, including expected receivables of 167 million, and amounts which were payable as at 31st December. We have audited the accompanying financial statements of Kenya Power and Lighting Company, PLC Staff Retirement Benefit Scheme, defined benefits, which is on pages 113 to 148 of this annual report. It comprises the net statement of net assets available for benefits as at 31st December 2023, statement of changes in net assets available for benefits, statement of members' funds, and the statements of cash flows for the year then ended, and notes the financial statements, including the material accounting policies. In our opinion, the financial statements gives a true and fair view of the scheme's net assets available for benefits as at 31st December 2023, and the changes in net assets available for benefits and cash flows for the year then ended in accordance with the International Financial Reporting Standards and the requirements of the Retirement Benefits Act. Thank you. That's the end of my presentation.
Thank you very much. Thank you. Before I call the next speaker, I would like to recognize Engineer Peter Prezi, the MD for Kengen. Karibu sana, baba. Tu pamoja. Asanteni sana. I think I better also take this opportunity to introduce Engineer Daktari Joseph Siror. He's a new person, the MD, CEO of Kenya Power Company. Karibu sana mzee. I now invite Mr. Richard Muriithi from ICA Lion Asset Management to give a brief overview of the scheme's investment. Mr. Muriithi, karibu. Oh, it's done. It's done. It's done. Where am I going? Just a minute, please. You came. Sorry. What I got is not working. Karibu sana, Dan.
Thank you. Good morning, Board of Trustees. Good morning, members. My name is Dan Gadhogo from Sanlam Investments. So I'll share with you a joint fund managers presentation from the two fund managers of the scheme for the financial year that ended in 2023. That is Sanlam Investments and ICA. So I'll wait for projections. What we have is a three-part presentation. We'll talk about the role of a fund manager. We'll give an overview of what markets did in 2023, as well as an update for 2024. And we'll review how the fund was invested during that financial year. So to start with, we'll start with the role of a fund manager. And members, what we do for the scheme, if you go to the next slide, is that key among them, we advise the Board of Trustees on how to go about investments. The scheme is regulated by the Retirement Benefits Authority, who are the regulators of pension schemes. And RBA generally allows pension schemes to invest in those four asset classes that I've listed, and I will go through them. There is what we call fixed income. Fixed income is investments in interest-bearing securities, like treasury bonds, fixed deposit, treasury bills. And members, one of the largest investments of the scheme is in fixed income, especially in treasury bonds. We have what is called equities. Equities is investment in the stock market. Stocks like Safaricom, Kenya Power, Equity Bank, and so forth. And again, your pension fund had invested in the stock market for the year that ended in 2023. There's what we call offshore. Offshore is regarded as any investment that is domiciled outside East Africa. Again, your scheme was a big investor in offshore for that year that ended in 2023. And we have what is called alternatives. This is investment in private equity, in property. Again, just to reiterate, the Kenya Power DB scheme is one of the schemes in the country that has really invested well in properties. The chain is pitched to talk about the property portfolio, Sakile. The scheme has really invested well, and that portfolio has done well. We also required as investment managers to invest in accordance to a document called the Investment Policy Statement. This is a document that is drawn by the Board of Trustees. And what it does is that it gives guidelines on how investments should be done. So it gives a maximum and a minimum on what investment, say, could be done on fixed income, equities, and what have you. And it looks at things like the age profile of the scheme, of the members. So it's a document that's a very important document, and we are required as fund managers to comply with it. We're also required to submit returns to the RBA and meet with the Board of Trustees. And I'd like to confirm that we've met with your Board of Trustees at least 4 times last year, and we've had very numerous meetings with the Secretariat. And in these meetings, what normally does is that we align strategies just to make sure that we are speaking on the same length. In the next section of the report, I'll give a review of what markets and the economy did for the period that ended. That first slide shows inflation. And members, inflation last year in 2023 was quite high. Central Bank has their target on inflation. Their target on inflation is between 2.5 and 7.5%. So last year in 2023, we saw inflation even touching levels of about 9%. It was quite high. But this year in 2024, the good thing is that inflation has come down, mostly because of the good rainfall that we have had. The good rainfall has led to prices of food commodities coming down, prices of unga, and I think we can all attest to that. And the latest inflation numbers at last month was at about 5%. In the next slide, we look at currency. Currency was the big factor if I was to single out a big macro factor last year, if we go to the slide on currency, this is the slide before this. A lot happened with currency, and the currency movement really influenced the way investments of the fund performed. So you might recall last year we had an issue of dollar liquidity. That was well documented in the press. We saw currency depreciate, the Kenya shilling depreciate to levels of about 156 against the US dollar. And the reasons for that are generally because, majorly two reasons. What was happening externally, especially in the US. In the US, what they did is that they increased interest rates, their central bank, as a way of trying to fight inflation. And what happened is that when they increased interest rates in the US, the fixed income securities in the US, that is the treasury bonds in the US, became very attractive than they have ever been in a very long time. And we saw a lot of money, investor money, coming out from developing countries like ours and going to the US because the US interest rates were quite attractive. So that had an effect on our shilling and many other currencies for developing countries. And again, number two, there were murmurs on debt sustainability for Kenya. If you recall, there were fears that Kenya would probably not be able to pay a Eurobond that was maturing this year in June 2024. So all those contributed to the shilling depreciating. But fast forward at the beginning of this year, we saw a lot of support from the IMF and World Bank. They injected a lot of money to our Kenyan economy, and the effect of that is that it more or less guaranteed that the Eurobond that people feared would not be paid, that it will be repaid. And after that, we saw Kenya was able to issue another Eurobond in January, and basically the fears on debt sustainability that Kenya had, those fears more or less ended. We saw a lot of investor confidence at the beginning of the year, and we saw a lot of money start to come back to Kenya this year in 2024. So in 2024, the Kenya shilling as a result has appreciated quite significantly, and right now the Kenya shilling is at about 129 shillings. So some very good news, shilling appreciating from levels of about 156 to 129, majorly because of investor confidence. The next slide is on interest rates. And the members' interest rates last year increased significantly. And the reason interest rates, if you look at that graph, it represents the one-year treasury bill. It's one of the fixed income securities. Interest rates increased in 2023. And the major reason interest rates increased is because government was trying to make, or rather CBK was trying to make our fixed income securities attractive. Remember, a lot of money went to the US last year because their interest rates went up. Now, government, to try to bring back some money, they increased interest rates. And we saw interest rates increase to about 16, 17%. And that's where we are at the moment. Now, if we go to the next slide, interest rates going up is a good and a bad thing. It is a good thing for any new money. Whatever new money that comes in the scheme, be it contributions, that money is invested at high rates. But it is a bad thing for whatever investments had been made before interest rates went up. That is investments that had been done before 2023. Remember, the scheme was still in existence. This is the 18th AGM. So the scheme had already made investments at prevailing rates then, which were at about 12%. Now, whenever we value the scheme investments, we value them at the selling rate. So if interest rates go up and the prevailing rate is 18%, what happens to those bonds that an investor had bought at about, say, 12%? It means that they are not as attractive as the new bonds that are being issued at 16%. So what happens is that when you are valuing those bonds, you discount them, the bonds that had been bought at lower rates. And that is what happened last year. And we saw moderate return from bonds for the scheme. And we look at how the scheme performed. If you look at the equities market, because of the lack of confidence in the Kenya shilling, many foreign investors were selling from Kenya. That is last year. They had no confidence in our shilling. And just to note that foreign investors are very influential in our Nairobi Securities Exchange. They account to close to 60% of the trades. They are very influential. So when they were pulling out their money because they didn't have confidence in Kenya, we saw the equity market do very poorly last year. And any investor who had invested in the stock market, suffered unrealized losses. And the equity market was down by 27% last year. Now, the good thing is that, as I mentioned, this year in 2024, currency there's a lot of confidence because of, those debt and sustainability issues have been, they have been addressed. As a result, we've seen the same foreigners invest back in our equities market. And this year, in 2024, the equities market is up by about 29% thereabout. So two different scenarios. Last year, the markets did poorly, but this year we've seen the markets do quite well. Remember I talked about offshore markets? The scheme can invest in offshore. That is in investments outside East Africa. And your scheme, if you go to the next slide, had invested in offshore markets in the year that ended in 2023, and offshore markets did well. Offshore markets were up by 54% last year. That is specifically the markets in the US, and your scheme benefited. The scheme had close to about 5% invested in those offshore markets, 5% of your overall funds, and those offshores did well. So as a summary on markets, just to summarize and wrap it up, last year was a tough year, especially for the stock market, because of the fact that foreign investors did not have confidence in the shilling. And as a result, we saw the stock market do poorly. Treasury bonds, which is a very significant investment of your scheme, had positive return, but very moderate return because of interest rates going up, as I had mentioned, given that most of the investments had been done in previous years at lower interest rates. But offshore is a portion of your scheme that did well and really helped the overall performance of the scheme. Now, to the third part of the presentation, which speaks on how the scheme was invested. That's a bar graph of asset allocation. It's a graphical presentation of what you have in your booklets, page 114. This is just a graphical presentation. It shows how the scheme was invested. So the biggest allocation, the biggest portion of your scheme, if you look at the blue bar graph, was in investment property. So about 48% of your scheme was invested in property, followed by 31% of your scheme being invested in government securities. And most of that was in treasury bonds, treasury bonds, followed by about 1.5% in unquoted equities, 4.1% in private equity, that is, equities that are not listed, 10.2% in quoted equities, that is investments in the stock market, in stocks like Safaricom, Equity Bank, Kenya Power, and so forth, 3% in offshore, and 1.7% in term deposits. So you can see that in your booklets in page 114. So that's just a graphical presentation of how your scheme was invested. If you look at performance, we've shown the historical trend of performance for the scheme from 2018. So that shows how the performance of the scheme has been. And since COVID, generally investments have had quite a tough period. I'll zero into 2023, which is a reason for the AGM. The scheme return was 1.8%. Again, just to reiterate, last year was a tough year for markets, especially because foreign investors did not have confidence because of the Kenya shilling. If you were to compare your scheme's return with other pension funds, your scheme did much better than other pension schemes. There's a survey that is carried out by an independent service provider called Zamara. It looks at 438 pension schemes in the country. The average return for pension schemes was 0.4% last year. So whilst 1.8% was quite low and moderate, your scheme still outperformed other schemes, and it's largely because of some of the initiatives that the trustees have done, like the property and private equity investments. But now the good news, as I had touched, is 2024. We've seen investor confidence, we've seen the currency strengthened, and we've seen a lot of foreign money start to come back, and as a result, the markets have done quite well. If you look at that last bar graph, for the first 6 months of 2024, from January to June this financial year, the fund is up by 13%. So the fund we've seen a significant recovery, and we expect that 2024 will be a very good year for fund return, given that for 6 months, the fund return is up by 13%. Finally, as we look at the last slide, which speaks on outlook for 2024, it's quite wordy, but basically I'll just break it down by saying that we expect a much better year in 2024. There's a lot of investor confidence, and I've given the update of what the fund has done so far for 6 months. So we expect quite a good year in 2024 with the way things are going. There's a lot of good investor confidence, especially in the stock market, and the funds are, doing quite well. So with that, members, take note of any reactions. We'll take them at the Q&A session. Thank you.
Thank you very much, Yeka. That was something. Thank you. Now, our custodians, I would like to invite Nick Musyoki from Stanbic Bank to come and tell us if our assets are safe. Tell members if their assets are safe. Karibu sana, Nick.
Thank you, Chairman. Members, good morning. Last year, tulikuwa wapi? Somebody wants lunch today? Tulikuwa wapi last year? AGM? Kakamega. Hiyo imepita. Okay, my name is Nicholas Musyoki from Stanbic. We are the custodians of the fund. I'm joined by Amos Ogwang from Standard Chartered. So what I'm presenting today is a joint presentation for Stanbic and Standard Chartered, custodians of the DB fund. So I want you to look at the screen, only 20%. 80% muniangalia, sawa? Now, my role here is to confirm to you whether what you are being told in this room is correct, right? Because our role is to ensure that we protect the money, making sure that you get your pension, all right? So that's our role. So I will confirm to you that, next slide. So we are heavily regulated in this market. So you've heard from the fund manager. As a bank, custodian globally must be a bank. So we are regulated by CBK, Central Bank of Kenya, under the Banking Act. So I can confirm we have a license from Central Bank of Kenya. We have a license from the Retirement Benefits Authority, RBA. We also have a license from the Capital Markets Authority. As usual, my presentation will be very short. Please pay 100% attention. But again, when you invest in the financial instruments, you must also get approvals and licenses through Central Depository, because remember, you have to go through the market to do your transactions, and also the Nairobi Securities Exchange, because again, you have to go through brokers to make sure that you buy securities in the market. Are we okay up to there? So we are heavily regulated. Now, as a custodian, ourselves, Stanbic and Standard Chartered, we also have to give reports to those regulators. I counted how many reports? Over 10 reports, actually about 15 reports, which we need to do throughout the year, just to ensure that we protect your money. Pension yenu ni kitu ya maana sana, so it has to be heavily regulated. Next slide. Now, nataka muinue mkono moja tu hivi. Hatutakaa sana, just for 1 minute. Aya, ukiinua vidole mbili, shikilia mbili hivi. Number 1, ukienda kwa market, if you are going to supermarket, you are working in the supermarket, so your fund manager walks into the supermarket to collect sugar, to collect milk, to collect bread. Anapitianga wapi? Cashier, si ndio? Cashier is very important, so you can bring your hand down. Tutainua tena tu, msijali. So 2 things. 1, when the fund manager makes a decision to go to the supermarket, ako na budget, he knows what to buy. Ndani akiingia kwa supermarket, ako na hiyo basket anasukuma hivi. Sugar, milk, bread, etc. The basket is full. You don't go home with it. You must pass through the cashier. So item number 2 is settlement. So we must settle in time. So as you move out, you pay for it. So when the fund manager does their decision to buy equities, government securities, whatever you are seeing in your books there and in your statements, the custodian is waiting at the cashier to pay. So Standard Chartered, Stanbic, wanalipa. Simultaneously, ni kama ukinunua land. Ukinunua land unapeana pesa alafu unachukua nini? Title. Very important. 2 items for the custodian. Number 3, sasa, number 3. Tumefanya ya kwanza na ya pili. Number 3, when you invest in equities, corporate bonds, deposits, government securities, you must get some money into your pocket. Rudisha mkono chini sasa. Unajua lazima niwalinde vizuri so that next year you can still listen to me. So, the first one we said, you select in the supermarket. Number 2, you pay for it at the cashier. and then you go with it home. The custodian role is to ensure that this milk inawekwa kwa fridge, all right? We protect that milk until your retirement. Tunaiweka hapo kwa freezer. Lakini tunawatoleanga kidogo. Those payments you get every month. Tunawatoleanga kidogo, tunarudisha kwa fridge. Tunatoa kidogo, tunarudisha kwa fridge. Kenya Power tuna make sure wanatupatia stima so that it doesn't go bad. Sawa sawa. We are together up to there. Protection is key. I want to confirm to you that the custodian role and Stanbic, Stanchart, we do that effectively. You invest to make money, dividends. What was Safaricom mikono juu? Every year you get dividends. So this scheme has invested in equities. We have invested in other securities, so we make money by those investments. All right? So our role is to collect that. Even rental income, when you invest in property, you must get rental income. The custodian role is to ensure that your income inarudi kwa scheme, and we do that effectively. Lastly, lastly, we must report to the members once a year. Last year tulikuwa Kakamega, this year tuko hapa Nairobi. I know next year we'll go somewhere else with akina chairman hapa. So we ensure that we report to members every year, once. Lakini our trustees hawa, mnaona hapa, we meet them every 3 months, just to ensure that we give them that report. Sawa sawa. Next slide. Next slide. Now, I want to confirm to you what you are seeing in front of you, the statements you've seen in your records. We have participated as Standard Chartered and Stanbic to give a report to the auditor. So they came to our offices, they checked on what we are talking about to see whether they can touch and feel what we are talking about. So in the unlikely event today, the sponsor, engineer Papa, the sponsor walks up today and closes Kenya Power. What happens to you? Okay? In the unlikely event somebody walked into Stanbic and liquidated Stanbic Bank, what happens? Naona sasa mmeamka. In the unlikely event somebody walked in Standard Chartered, or the fund manager, or anybody in this room and closed shop, what happens to you as a member? Itafanyika nini? Your money must be protected outside the assets of anybody you are seeing here. And I'm here to confirm to you that your assets are protected. They are registered outside the assets of anybody you can see in this room, including the sponsor, Kenya Power, including Stanbic, including Standard Chartered, including the auditor, etc. Sawa sawa. Tuko pamoja, mmefurahia. So that's my confirmation for today. And you know bankers don't lie, eh? So that's the truth, and the naked truth, I can assure you that. So I can confirm we participated in coming up with those numbers over there in the financials and the statements you received. We participated at the bank. So thank you so much, and back to you, Chair. Thanks.
Thank you very much, Nick. Thank you. Now, as you all know, as a pension fund or a pension industry, we are regulated. We are regulated in the sense that we don't just do what we want to do. There's somebody watching us. It's now my pleasure to invite Anthony Chumo from the RBA to make some remarks on behalf of the regulator. Karibu sana, Anthony.
Thank you, Chair. As the Chair has said, Board of Trustees, members, good morning. As he has mentioned, my name is Anthony Chumo, representing the authority. Mine is just to confirm to you that we are committed to, and we always work with trustees to ensure your scheme is compliant. And just to highlight, our mandate as a regulator is that we do regulate establishment and management of retirement benefit schemes. We do protect interests of members and sponsors and promote development of retirement benefits industry, as well as also advising the Cabinet Secretary matters retirement benefits industry. And finally, also we implement government policies with regards to retirement benefits industry. Just as a twilight, your scheme is among the many schemes we regulate, a little over 1,000 schemes. With assets that is, as at last year, we have 1.7 trillion of assets in the pension industry. One of our strategies as the authority is we are hoping to oversee the growth of this industry. By 2030, we are hoping to have the growth of the industry up to 3 trillion. I think some of the regulatory changes, I think the chair I write on that, so I'm not going to belabor on that. Basically, ours is to ensure and commit to members that we continue and we'll always work with trustees to ensure members and the scheme is compliant and members' benefits are protected. Thank you, Chair.
Thank you very much. Anthony, thank you. Amos, are you ready? I hand back the mic for you for the time being to give us directions. Yeah, no, after. The sponsor first. Okay. Sorry, Amos, we are waking up a little bit earlier. I now want to give this opportunity to the sponsor himself. Is here, not a representative. Engineer Daktari, can you come and tell us what you have to? Karibu sana.
Possibly I'll begin by laying the fears that were given that possibly the sponsor could close. Yeah, I think on that particular regard, I think you can have the confidence that will not happen. But yes, Chairman and of the Board of Trustees, DB Scheme, Mr. Sami Odwori, my fellow trustees, CEO and Trust Secretary, Mr. Edwin Ruto, and the Secretariat, representatives from Retirement Benefits Authority, service providers and other stakeholders present, members of the DB Scheme, ladies and gentlemen, good morning. Yeah, let me also recognize my colleague, Peter Njenga, who is with us this morning. I also know is... Okay. Yeah, I'm delighted to be part of this year's annual general meeting and extend my sincere gratitude to the trustees for convening this important meeting. I'm equally happy that I have been accorded this opportunity to speak to the fund members who are also my employees, and some, of course, I do know are retirees from the company. Ladies and gentlemen, as we are all aware, the last couple of years have been quite challenging for many businesses and the different sectors because of local and global factors. I note with admiration that the fund has navigated through the turbulent period with sustained focus on the objective for which it was established. That is a clear demonstration of the fund's exceptional resilience and adaptability to changing operating environment. I'm pleased to note that our pensioners have consistently been paid their monthly pension and on time. This is actually something I also keep monitoring, and we are glad that this is indeed happening. For this, I would like to sincerely commend the trustees for the vital role they continue to play of providing oversight, ensuring compliance with relevant legal and regulatory requirements, and always acting in the best interests of the members. Equally important has been the contribution and support of the service providers and the other key stakeholders, key among them, of course, the sponsor and the fund secretariat. The collaborative effort of all has ensured that the fund continues to discharge upon their retirement or to beneficiaries in the event of death in service or retirement. In my capacity, I would like to assure the members present of the sponsors' unwavering goodwill and support. Fulfilling his obligations to the fund. As we consider the preceding statements, I would like to urge all members to take an active interest in the fund. The scheme offers numerous products and services that members can utilize for their benefit.
Moreover, I encourage you to actively participate in the fund's events, such as the member education and awareness seminars. These platforms provide great opportunities for members to be updated, informed, and educated about their fund and retirement in general. An enlightened member can make valuable contributions to the fund. That is through ideas and proposals. In closing, I would like to recognize and appreciate all the members present for making time to attend this event. Your active involvement and participation in the affairs of the fund is important for the success of the fund. Thank you, and God bless you all.
Thank you very much, Engineer, Trustee, CEO, and as we used to know you, MD. I don't know where the word MD disappeared to. Right. Amos, I hand the mic to you for guidance, and then when you are ready, hand back to me. Thank you.
Thank you, Chairman, for the opportunity again. So, members, we are going to go to the next step of this AGM. And I think one thing that our trustees value is feedback. So we are going to take us through a session of a poll. We have 3 short questions, and I'll request the QR code to be projected so that we can be able to serve you better. So for those who are tech savvy, kindly scan that QR code. And as it is projected, maybe I can read through question number 1. And it reads as follows. Number 1, in what areas would you wish the fund to put more effort into? And we have 4 options. Number A, we have healthcare in retirement. B, we have member education and awareness. C, we have investments. And D, benefits. So you have an opportunity to capture more than one item. So, yes, so use your phone, you scan the QR code so that you can be able to pick the statistics. Yeah? Okay, okay, so for those who have smartphones, just go to your properties, and there's an option of scan QR code, and once you enter, you'll be able to get it on your phone. Then you go to open link. Then from there, we'll be able to capture that. So as we see, we have 4 responses coming in. So settings, yeah, even the camera can capture the QR code. Yes, we can see the results coming in. Your feedback is important so that we can be able to action that. You're progressing well. Maybe in another count of 10, 9, 8, 7, 6, 5, 4, no movement, 3, 2, and 1. I think, thank you for the responses. So we can go to the next question. And the next question is, which is your most preferred mode of communication? We have A, mobile telephone, we have email, and we have WhatsApp. So we can poll the results coming in. Thank you. So in a count of 10, 9, 8, 7, sorry for that, 6, 5, maybe you can show 4, 3, 2, and 1. So thank you for that. So we go to the next question. And before I read the next question, is just to note that the trustees have arranged for a Medicare product, and the next question is related to that product. So the next question is, what do you think is the main reason for the low uptake of the retirees' medical scheme? And the options that we have here is affordability, B is accessibility, 3 is information on available options, and then D is terms and conditions of the medical covers. So we can poll that. I'm not sure if you're able to see the third question and the last one. So as we poll, I know we can multitask. I think it will also be important to note that there's one initiative that we can assist trustees to serve you better, and that's the annual registration through BVS registration, and for those who are tech-savvy, through voice registration, to ensure that your benefits come in on time without interruption. So back to the poll, question number 3, we are progressing well in a count of 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. So I think that comes to the end of the poll, and I wish to thank you for the participation, and this will help us to serve you better, and we'll be able to include your comments in our service delivery. So Chair, with your permission, I think we have the next session, a short session of about 5 to 7 minutes by Steamer Choir as we prepare our questions and answers. So we've gone through the entire reports. We'll have one session for the Q&A. So I'll encourage you to note down all the questions. It can be from the fund managers, from the custodians, from the auditors, from the regulator, and also from the trustees. We will have a Q&A after the presentation by the choir. So karibu sana Steamer Choir, as we prepare for the questions thereafter. So 5, 7 minutes, we'll be okay. Karibu.
Ai.
Chuma chako ni jeni nyamalo acheng nyara hero nyando Nyar kobura onyolo nyako acheng nyako dongo obera Nyeri wanda tiyo kenga nono acheng nyako dongo obera Nyar kiwegi lake okwe wawachopo Kisumu lilo
Lagda is also a watch. Mano nyara komo dhie polo, nyasepe nyanto, osigo bibiro kaniti omo gango, duok ne meru.
Chuma chako ni jeni nyamaro, achieng nyara hero nyando. Nyar kobura onyolo nyako, achieng nyako dongo obera. Nyiri wanda tiyo kengna nono achieng nyako dongo obera Nyar giwegi lake okwe wawachopo Kisumu li
Ao ndio kusip rao rie gweng, dhanu win rao rio kara, mufubede go rao rio tokianu chungbud rao. Mawach manade ni awa.
Kenya Power Pension Fund.
Jeni achieng nyara hero nyando Jenny achieng nyara hero nyando Ikowa nyaka ne wachopo kunya Ikowa nyaka ne wachopo kunya Mbu waparo winyo wila kianda Mbu waparo winyo wila kianda December Christmas moronyo chiorona December Christmas moronyo chiorona
Mwasa.
Kenya Power Retirement Benefit Schemes, maisha bora uzeeni.
Hey, we are barabara, we are barabara. We are barabara, we are barabara.
Kapari pari.
Hey, we are barabara, we are barabara.
Kapari pari.
We are barabara, we are barabara.
Kapari pari.
Allah dai solsa woche.
Maisha bora
sabulada
uzeeni.
Dinyos, bunyiso dinyos niya. Leo. Haya.
Kenya Power. Kenya Power.
Hata mtu na wembe, hata mtu na makasi.
Mamoti Edwin Ruto ana support maisha bora uzeeni. Peter Njenga engineer pale ana support maisha bora uzeeni. Tuko naye Bwana Siror ana support maisha uzeeni. Joyce Koskei vile vile pale tunakuona. Anmunge mama wa
Ochamadi.
Anmunge
Ochamadi.
Tobias
Ochamadi adi
ana support maisha bora uzeeni.
Mano nyako marach bisero ko ya god ko
Joseph Siror
ko chuno.
Mzee wa nguvu ana support maisha bora uzeeni.
Haya.
Simu tupigie makofi tuendelee. Na tunaomba msimame kidogo tafadhali.
Tusimame wote kidogo.
The song that we are going to do tafadhali. Hii sio kucheza kwa mlindo.
Maisha bora uzeeni jambo la muhimu.
Zorongo mwana wa mahaho. Aya, ruka namna hii. Si mwana wa mama utinya, mwana wa mama uruma,
Nelson pale
mama utinya,
Bwana Nadome
mwana wa mama uruma
ana support maisha bora uzeeni.
Angana walimbere muraini ayona pisa una
Madam Bore pale ana support maisha bora uzeeni.
Engineer Joseph walimbere muraini hariyo mwana kwa munda hodidi
Bwana Njenga pale ana support maisha bora uzeeni.
Mwana Raison hodidi mwana Bikiru hodada
Madam Raison pia
baba
Madam Wanguru
hodada
ana support maisha bora uzeeni. Engineer Siror Joseph
mwana wa
Papa Mkulu ana support maisha bora uzeeni. Namuona Fadhamo Fadhamo.
Aya, mabega kidogo, mabega kidogo. Sinyari. Mabega kidogo, mabega kidogo. Sinyari. Sinyari. Yonga yumerera. Yonga yumerera. Yonga yumerera. Hey ya ya. Yonga yumerera. Hey hey ya ya. Yonga yumerera.
Omware pale mwesi, baba wangu mwesi, wasicha mwesi, wasicha mwesi, wakana mwesi, wakana mwesi, mtejaramba pale, wasi tunakupa heko, gayumerera, botiso, longarumerera, bwana Nadome pale, boiboyet, bwana Steven Mkuru, wazee wa sapoti maisha bora uzeni. Madam Cecilia Kalugu, mdhamini mkuu. Pension pale, wadhamini wetu. Bwana Olieti Kombe, tunawapa heko.
Sibara sitinyu, sibara sitinyu, emunyange sitinyu, sibara sitinyu, emunyange koye, emunyange koye, rongarumbera, koye, emalina koye, irige ukoye, adumo, hey, rongarumbera. Hey, bukusu, abana bukusu, rongarumbera, 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 abana Kenya power, rongarumbera. Pension, abana Kenya power, pension, maisha uze, rongarumbera, 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 sima kwaya, rongarumbera, nawapenda, rongarumbera, asante sana, rongarumbera, kae chini, rongarumbera.
Kenya Power Pension Fund, maisha bora uzeeni.
Makofi kwa choir. Thank you so much. And before we go to the Q&A, maybe we can have the Secretariat come to the front. KPPF Secretary, kindly. So, Chairman, with your permission.
Yes. Now, dear members, I would now like to take this opportunity to give the Secretary to introduce the Secretariat. These are the people that really the actual job. We may sit on this table, direct, and hope, but the people who really do the job are there. So I would like to ask Mr. Edwin Ruto, our Secretary, to introduce his people. Edwin.
Thank you so much, Chairman. So members, good morning. So in front of you here is a team of ladies and gentlemen. This is a team that is executing the day-to-day operations of the scheme under the guidance of the trustees. So I'm sure you've interacted with most of them, especially during the member educations. And this is the same team that is responsible for the logistics for this AGM. So any issue that you have regarding the AGM for today, please reach to any of these members here. So Mr. Chairman, I think allow me just to thank this team because they've done a great job. Despite the challenging environment that we've seen, I think the fund managers mentioned this earlier. So we've been able to discharge our responsibilities within that challenging environment, and it's because of this team. So Mr. Chairman, allow me just to, because there are not that many, so we can just give them an opportunity, just to mention their names and the department in 1 second.
Morning, members. My name is Amos Tung from Investments Department.
Jambo, members. My name is Steve Mathuka from Pension Administration.
Good morning. My name is Joseph Mitito from Investment Department.
Good morning. I'm Simon Kamau, Finance Department.
Jambo, Ian Babu, Finance.
Good morning. My name is Faith Tabibu from Investments.
Good morning. My name is Hanifa Ibrahim, CEO's Office. Good morning. Hanifa Ibrahim, part of the CEO's Office.
Jamboni, Vicky Mbrugo, HR and Administration.
Habari ya members, tusalamiane. Martha Simiyu, HR and Admin Department. Karibuni sana.
Good morning, Susan Guyo from Pension Admin.
Good morning, I'm Janet Mrombo from CEO's Office.
Good morning, I'm Evelyn Kivaya, Marketing and Communication.
Good morning, I'm Winnie Ofafa from Pension Admin.
Good morning, my name is Vanessa, HR and Admin.
Good morning, Amos Kimani, Procurement.
Good morning, I'm Mondu Peter from Procurement.
Good morning, I'm Stella Kosgei, Pension and Admin.
Good morning, Kezia Mwanja, Investments.
Hello members, Christine Chelimo, ICT Department.
Bwana Sifiwe, David Nyambok, Pension.
Good morning, members. Gregory Okoth, ICT Department.
Good morning, members. My name is Nehemiah Wekoba, Investments Department.
Good morning, members. I'm Quinta Obunga, Investments Department.
Good morning. I'm Peter Muya, ICT Department.
Susan.
Good morning, members. My name is Susan Olelo. I'm in Finance.
So members, that is the team of the Secretariat. So in case you have any issue touching on pension and any matter on today, please liaise with any of them. So you can go back, my team. So Mr. Chairman, I think that's it. I hand over back to you.
Thank you very much, Edwin. Members now know who serves you. If you have any specific question, they will be ready to give you the phone so that you can get them anytime you need them. Members, you may now ask any question you might have regarding the chairman's report, trustees' report, investment reports, as well as the audited financial statements. Mr. Maduka, Pension and Administration, will take us through the questions and answer session. Steve?
Thank you so much, Chair. All protocols observed. As I just said, my name is Steve Mathuka, and I'll be taking us through the Q&A session. Chairman, we'll begin our questions with the ones that we received in advance, questions that had come from both in-service members and the retirees. And Chairman, if you'll allow, we'll go straight into these questions. The first question is from Solomon Obura. And Solomon Obura is requesting, actually proposing, that the scheme comes up with a portal that retirees can be updating their details as opposed to going through the lengthy process of having to call Secretariat staff or having to do emails so that their personal data can be updated. So in short, Chairman, Solomon Obura is asking, is a scheme considering coming up with a portal through which they can be updating their records? I will go to the second question so that all of them can be responded to at the same time. There are not so many. And this one is coming from Hussein Mohammed. This is an in-service member based in Mandera. And he says that members based in the off-grid stations or the isolated stations or depots have not been actively participating in the member education and awareness programs, and he wishes that the scheme doesn't marginalize them beyond the already existing marginalization, and therefore is requesting if the fund can also be considering them for events or programs like the one for member education. That is from Hussein Mohammed, who is based at Mandera. Says he's asking this on behalf of the members who are based in Abaswen, Wajir, Moyale, and such like isolated stations and depots. There is a question that has been asked by two retirees, one of them being Benedict Mwaniki and John Machoka. Machoka says, "Dear Chairman," and he continues to say that some years back, retirees were awarded a discretionary pension increment, which they really appreciated. He wonders why there has not been such an increment since 2014, since 2017, the last two times that we had discretionary pension increment to the retirees' pension. Finally, Chair, among the many questions that we have received in advance, there is a question from retiree Wilfred Boru, and he's asking why is it that every year the medical cover provider, that's insurance company, keeps on changing. He's asking, is it possible for the retirees to have just one insurance company providing medical cover for an extended period of time, as opposed to moving from Britam, UAP, passes, and the other insurance companies that we have used in the past? Chair, those are the questions that we have received in advance. In total, there were about 30 questions, but most of them were personal in nature and have already been responded to by the team from the Secretariat. So, Chair, maybe you can take those questions before we can go to a different set of questions. Thank you.
Thank you, Steve. I will try to answer these questions with the help of my colleagues and see how far we can get. I don't see any problem with having a special portal for this, members who are able. As usual, my problem has always been we should never think that all our pensioners, our retired pensioners, are digital, such that when we come up with something like this, we'll all participate. But for those who are able, I'm sure, Peter, you'll take up this matter and see how far we can push that. I don't see any problem with that one. Regarding the people outside the station, outside Nairobi or outside urbanized areas, we know them. We're talking about Wanjia and what have you got. There is no problem. The question is the number. Because if you are going to travel all the way from Nairobi to go to Wanjia to meet members, the number must be significant so that you don't take too much, you don't waste time and money to go and meet one or two people. But I'm sure whoever has raised this question must be aware that maybe they have got enough numbers, and the Secretariat, we are going to find out how many we have got out there and see how we can reach them. There isn't any problem. We can agree to have one center instead of going to Marsabit or Wajir and where have we got. We agree that we are going to meet all of them, say in Wajir, Marsabit, and I don't think that will be a problem. The question of bonus. The question of bonus, members, this is not something that comes automatically. When we issue bonus like we did in the 2014 and 2017, we do that when our assets are more than our liabilities. Don't forget our prime objective is to pay your pension. And where we have done well, and the assets are more than the liabilities, then of course, we sit down and think, and this money is normally passed to the retirees. This happened in the year 2014, when we increased by 15%, and 2017 by 10%. Since then, we have not done that well. The economy has not allowed us to do that well to be able to pay any bonus. Don't forget, the government expects us to balance our assets and our liabilities. The liabilities, the promise we gave to you under DB that will pay you until you pass on. That must agree with the asset available to meet that liabilities. When there is a disparity or the liabilities are more than the assets, then we have to work very hard so that we don't go to the engineer seeking help. Now, the medical cover keeps on changing. Somebody is asking, keeps on changing. You see, the people that insure us out there, they are in business. And if they find perhaps our team, they are not making money from us, usually they will withdraw. They'll say it is very expensive to run our scheme. Hence, since we don't want to leave you naked, when we have lost somebody, or whoever was giving the service the previous year says that he cannot continue and withdraws, so we have to look for an alternative. And that's why, more often than not, you'll find that the medical providers keeps on changing. But perhaps I would like to ask, is there anybody with addition, trustees? Ernest, can you add on that? Who is in it? Nobody. But I think that's the main reason why the medical has to change. Unfortunately, those who retired earlier, we will have to keep on doing that. But those in service, of course, you know what is happening. Thank you very much.
Thank you, Chair, for those responses. We now move to the questions that have been received during this meeting. And these are questions that have come through the Zoom webinar Q&A feature. And we have two members who have asked a question. Their names are Albert Omosa, this is an in-service member, and Christopher Kims Kipkemei, based at Steamer Plaza. And they are asking, what austerity measures are the trustees putting in place to manage costs and in the process ensure that the fund is profitable and makes good return on investment and hence is assured of giving good benefits to the members? Measures that trustees are putting in place or implementing to ensure that costs are well managed and as such the scheme is able to make good profits, which will translate into better benefits to the members. I think this is a question that we have received through the Q&A feature of the Zoom webinar. So Chair, that question can be responded, then we can move to another kind of a question.
Thank you. So I can take that, Mr. Chairman. So thanks, Omosa and Christopher, for that question. So for our scheme is just to appreciate where we are. And there are two main areas of focus. The first one is to increase the top line, and that is the revenue. And as you've already been taken through, the revenue generated is a factor of the economic and the investment environment. You saw what the fund managers presented, and members, from the indication that we've seen, we are likely to see a very, very positive year moving forward. So we hope this will be sustained so that then we can be able to maximize on our revenue. The second area of focus is on cost. And for information of the members, we are one of the schemes with the lowest cost ratio. The industry practice is about 2 to 2.5. Ours is between 0.9 to 1.1%. So the trustees have taken all the measures that is required to ensure that we are within, or we spend as less as possible to ensure that what is then available for distribution is optimized. So we will, as trustees and also as secretariat, we will continue to put in place those measures. As I mentioned, revenue maximizations. And this comes, of course, with diversifications, and I'm sure you've seen what was presented. When you see the property investment, for example, it's not necessarily the building. I think these are some of the historical land that we acquired. And there is already an initiatives around that in terms of realizing the value. So it's a process that is currently ongoing, and we should be able to see, if that was to come to fruition, to see that optimizations of revenue. So I think I'd like to assure the members that the trustees are taking all measures necessary within the environment to maximize on what you take home. Thank you.
Finally, Chair, we can now take questions from the floor by the members that are present here. We are going to be assisted by Simon Kamau and Nehemiah to move around the mics so that those members who have questions that would want trustees to respond to can do so. So, Chair, we invite questions from members. The first question is from Dr. Anna War. She can properly introduce herself and ask a question.
Good morning, Board of Trustees, fellow pensioners, fund managers, custodians, the auditor, ladies and gentlemen. Morning. Now, you will allow me to ask just 3 short questions. One to the chairman on the issue of the minutes. I think we need to have more transparency on that, and it would be good also to have matters arising from the previous minutes, even if it's just put as a sheet in the document that you have circulated, so that there's a continuous process. Otherwise, we tend to lose what we stated in the last meeting, and like you have said, questions, we don't have answers because we don't know we can't remember what we asked. So I think it's important that with minutes we have matters arising, and at least the major issues that were discussed or agreed upon circulated to members at the next meeting. Otherwise, thank you very much for a good report. For the fund managers, as you are aware, my name is Dr. FCP Ann Ward, and I'm a trustee at NSSF and also at the NSSF Staff Pension Scheme. So what I'm trying to say, I'm going to talk from know-how. We haven't performed very well, and I think, like I normally say to the fund managers, I think you need to be more aggressive. And also, I believe when I look at the IPS or the way we have distributed the funds, I think we are still too heavy on fixed investments. And I hate to say it, but this story of Karen and Dagoretti, I've been hearing it for the last 3-4 years. You guys aren't moving. It's the same story each time I come for the meeting. Oh, you know this property, this one. We are going to do this, we are going to do this. Please, can you agree on what is to be done? Because it's now impacting on us. And I don't think we are supposed to be having 48% on fixed assets. RBA, maybe you need to guide me on that. So I think that is an area that we really need to work on the issue of the funds. Also, I don't really think we are doing very well on issues of diversification. As you rightfully stated in your submission by the fund managers, we did very well on offshore, but we only have 5%. So even if we did 52%, but it's only on 5% of our assets. So that's of our funds. So I think that's an area that we really need to look at, either the IPS or we see what we need to do. But I think we still need to be more diversified. I see you're saying that we are doing well on 13%, but it's basically on one criteria only, isn't it? I think the stocks have rebounded, and the government paper, which I think, again, we are still heavy on it. And if something happens to those two, then we'll be back to where we were before. So we really need to get our act together, especially as you know, as rightfully said by the chairman, he keeps reminding us, we are not getting any more money coming from the sponsor. So we really need to look after the investment we have and see how best we can be able to spread it. I don't believe we should only be getting, we should only be getting dividends. Well, we've only gotten, is it bonus twice? That's not good enough. And I'm from the industry. I know what happens. That's not acceptable. So I think that is something that we need to look at. But that will come again when you look at the whole portfolio and see how best we can be able to manage to go forward. And last and not least, maybe to RBA, I don't know. I have a problem with the presentation. We are too heavy on sponsor, and he's bringing us very little. And we are very few on the pensioners. We only have one person. And you know what's happening in Kenya today. I don't want to overemphasize it. So I think that's something that we need to look at.
Thank you.
The sponsor, and can we get more representation? So maybe those are the 3 questions. Thank you very much for listening to me. Thank you.
Thank you, Dr. Ann. Those were 3 questions and 1 observation. I guess, Chair, we have them responded to before we can proceed. And 1 question per member, please, in the interest of time.
Yeah. Okay. Thank you, Anna, for your questions. Let me handle the first question, perhaps, and the last question. I'll ask the fund managers to respond to the other question. But when it comes to minutes of the previous meetings, yes, agreed, we have not perfected on this. I agree, we have not perfected on this. We have not been able to capture the matters arising. But I suggest this to members. When you get the minutes and you read them, and you think there is something you want to raise subsequently, I think we also expect you to feed us back. Let us know what you think or how those minutes have struck you, and what you like to as a follow-up, to be done as a follow-up. Once the Secretariat gets that, we'll combine that, and then when we meet here, we should be able to say, this is what the members were proposing or wanted to follow up following the meetings. I think that will be done that way. Now, when it comes to the last, I'll jump the other investment questions to be answered by the investment managers and go why the sponsor is heavy on this board. The sponsor takes responsibility. As I said earlier on, you were promised that you will get your pension DB until you pass on. When you pass on, your beneficiaries or wherever you have assigned to us will continue getting there. But in the event that the economy does not do that well, and the scheme is not able to meet its obligation to pay that pension, whose responsibility takes over? It's the sponsor. The sponsor takes over the responsibility. Hence, in fact, he has 4, and the members have got 3. What I would have liked to maybe hear from you, Anne, is now we have more trustees, we have more retirees than the in-serving members. But as it is, we have 1 representative of the trustees and 2 representatives of in-serving members. That's what we need now to correct as far as this thing is concerned. Once we do that, we'll have a situation where representation is real. But for the sponsor, even the law will not allow the sponsor to reduce the number of trustees on the board, because in the final analysis, they are responsible. So they must be there to make sure that things go well so that we don't go back to them. Steve, I'll stop there and maybe ask you to ask one of the fund managers to answer the second question, the third question rather.
Thank you for the good questions, Dr. Woor. Okay. On our investment allocation, ultimately our funds are pension funds, they are retirement benefit funds, and that is guided by the Retirement Benefits Authority's regulations. We invest to be in compliance with that. In the regulations, there's something called Table G, which specifies where we can allocate assets which are intended to be for retirement purposes. Within that, there is a framework on the allocation that we can invest in, fixed income and government bonds. There's actually a minimum allocation of that, that's specified in there, and our investments at the level that they are geared towards achieving that allocation. Our funds are actually very pioneering in the diversification that is there. We have investments in offshore of 3%, private equity of 5%. There are very many funds that have never ventured into that area of investing into unquoted equities. If we look at our booklet on page 140, you'll see all the investment areas that the fund has been able to achieve. Invested in not less than 4 private equity funds, and also utilized the specialized knowledge that the fund has in energy and power investments to take an investment into Gulf Power. And those are privileged opportunities that other funds may not be able to do, not only because of accessing the same or even having the capacity to make an assessment of it. The returns this year from January have been quite strong. About 13% is what we showed. And our return has actually come from the investments in government securities. The interest rates where they are today, the last time interest rates were at that level was more than 10 years ago. We invest based on the opportunities which are available to us, and today, if you're looking at a scenario where you last had interest rates at this level 10 years ago, those opportunities don't come very often. If we can make investments and earn a return of 15% that is assured and that is in an income form, we will favor that and capitalize on the same, and that will go towards also building liquidity, availability of funds to be able to, reinvest and also make distributions with consultation of Secretariat as well as the Board of Trustees. Thank you.
Yeah, thank you very much, Fund Manager. I just want to reiterate on what Chairman mentioned about representation. And the RBA representative is here to confirm. According to the existing statutes, the RBA Act, for a DB scheme, representation of the sponsor is supposed to be 2/3. And for member nominated, it's supposed to be 1/3. So that is the very reason, and the chair has heavily explained why the sponsor is heavy. Maybe just to take you back, those of you who are in leadership, especially Anno War, Gitonga, and the rest of the managers who are here, and also the other members, almost 15, 20 years ago, we ran on deficit, the DB scheme, to the tune of 5.2 billion. Negative 5.2 billion during the time of SK Gishuru. So what happened? The sponsor had to come in. The sponsor had to chip in. And it is a requirement of the law. Because the moment the assets are lower than the liability, then you end up being in a deficit. So the sponsor had to put in 520 million per year. Luckily, within a period of 3 years, because of good performance, we were able now to have a surplus. So that is the very reason. So the only area, the pot, and which Anna War has raised ably, that now we'll have to manage is the ADAD, where we have the member nominated, we have a pensioner, and we have some of us who are member nominated who are representing the existing employees. So this is the area, and which I think gradually now, the numbers of retirees have outstripped the existing. So that has to be addressed. Number two, there is the issue of offshore. Yes, offshore did 52% when the Kenya shilling shot to 156 to 160. But now what happened when Kenya shilling came to 129, the offshores have almost gone to negative. So it's a matter of balancing. It's not necessarily that you have to put all your money on the offshore, the cap that has been given. And I think this is where the fund managers come in and do play well. Yeah. Yeah, and also we are restricted by REA, there is a cap of 15%. Lastly, the issue of property. And I think it's also good to take you back. This is a property, our current property was bought in the year 1997. By then it was worth around 200 million. By those who were in leadership, SK and the rest, and we really appreciate. As we speak, this property is now almost worth 4 billion. So Anne, and those of you who are here, who can get us a buyer to get a 4 billion, a buyer who can get it, I think will be the happiest people. So this is the challenge that we are facing. Dagoretti is worth around 1.2 billion. So this property, when you see us, the property portfolio has gone to 48%. It is not of our own making. RBA are aware, and we've been able to give a remedial plan to RBA on how now to come to the requirement of 30%. So why the last 2-3 years, we've even gone to the newspaper. Getting a buyer, getting somebody who can produce 4 billion is not easy. We are even thinking now of subdividing the current land. Yeah, that is our option that we want to take. So maybe those of you who have money, if we decide to go subdivision, We're not going to divide to a plot, please. It may be half acre or an acre. So prepare yourself with around 60, 70 million per acre. We'll gladly accept you to buy those property. So as it is, we are where we are because of the situation that we are in. Thank you.
Next, another member with a question. Simon, behind there, there's a member. And please be straight. We are running out of time.
Habari zenu. Majina ni Nancy, staff namba 9549. Naweza omba kuuliza swali ambayo imenisumbua kwa muda. What determines somebody's pension? Inatumiwa jinsi gani kujua ile mshahara nitapewa nikienda retire, ile hesabu ilifanywa namna gani kwa ile mshahara mimi napewa every month? Sababu hata nikipewa hata 50 years mimi sitafika, hata hakuna pahali naonaga hata nikipewa 3%. Ilitumika formula gani kupewa hiyo mshahara napewa?
Thank you, thank you. That will be responded to, most probably by the CEO. We can take another question. Nehemiah, please say your name.
My name is Wilfred Onesimus, and I have 2 questions. One, as members of this scheme, is there a way that, like Safaricom does every year, when it reaches somebody's birthday, they can give something like some airtime or something, just to recognize? Can you be sending us a message just to recognize that we are valued members? Just a message.
Good question.
And number 2, the second question, we've heard about this medical scheme. Is there a way where the sponsor and the scheme can partner to come up with some sort of medical scheme to take care of the retirees? Because we have invested our youth in this institution, and now when we go out there, we are good for nothing, just for good for retirement. And we don't have money for medical and other things. So is there a way that the sponsor and the fund can partner to come up with a medical scheme to take care of the retirees?
Thank you. Another good question. Maybe we can have the 2 from him, from William, and the other one from Nancy being responded to.
Thank you. So, Chairman, I can take those 2 questions. So, Nancy, thanks for your questions. So, just to explain to members, so when it comes to the DB, there are 3 key factors that determine what you will take home as the pension. Number 1 is the last emoluments, basically the salary levels that you are earning. That's number 1. Number 2 is the year of service. Remember, this is a scheme that was closed in 2006. So we will be determining, so if you join this scheme, let's say in 2000, so you have 6 years. And that is a factor that is going to determine your pension. And lastly is what we call the actuarial factor. And I think it's normally 3% and 2% for the period between 2000, post-2000 and before the 2000. So that's an actuarial factor. So those are the 3 main drivers of the pension, the monthly pension that you are going to take home. We mentioned earlier about when the performance of the scheme is excellent. And that is a time when trustees, in concurrence with the sponsor, go through that process of determining what level of bonus we can be able to distribute. And I'm sure if you've been in this scheme, we've had a journey. We've had, I think, about 3 or so pension increases. And the whole spirit of that is to be able to optimize, particularly for those with a lower pension figure. So I think, Nancy, that is the positions as far as the pension level is concerned. For NESMAS, I think your first question is about member engagements. We have a strategic plan that we put the member at the center. And I think those are the issues that we should be able to consider moving forward, making the member part and parcel of our process. You mentioned something about the medical cover. And I think for retirees, the challenge is normally the affordability. Chairman mentioned earlier that the insurance companies are in business. And the insurance business is normally a question of numbers. So there are the numbers, the better rates you can be able to negotiate. So, and that informs the reason why we keep on also trying to look around whether there are any new service providers that then, I'm sure you know, I think last year we had one of the service providers that we onboarded, and I think relatively they were much better in terms of the premiums. Allow me, Chairman, to mention about the in-service, because I think there is a window. So there's a product called Post-Retirement Medical Fund that, thanks to the regulator and I think the industry players, this is a new product that facilitates the members who are still in service to start saving towards their medical cover upon retirement. So we'll be calling upon the members to take advantage of this window, because just the same way we receive your pension contributions, we'll also be getting the contribution towards medical, which we'll invest. And once you retire, then you will be able to utilize that to procure the medical cover. So I think those are the 2 questions, Mr. Chairman, that has been asked. Steve?
Thank you, Trust Secretary. We seem to be going out of the timelines that we have in the program. And for that reason, we are going to take 2 more questions. And any other member who may have a question, he or she can do it through email or through WhatsApp. You know our numbers, and you'll definitely get a response to it. So 2 final questions. 2 final questions, or fatigue is already setting in. There's a question there. You can pass a mic to him.
My name is Charlie Semo. All protocol observed. I've got only 1 question. I have 2 pensions I'm receiving, one from RBA and another one from ICA. I don't know whether all are noticed that ICA has no increment at all. I really don't know whether they consider inflation. And also, there's some misgivings on ICA. There's a little bit of lack of communication. Like, I think last month, they stopped my pension. And when I went there, they told me, "How you have never come here to tell us that you are alive." So I was wondering, I've always, my friend Nyambok has been very vocal, talking to me and telling me I give him the information. I've never communicated to IC at all from 2015 when I retired. So this time round, when they stopped it, I wondered why. So there's lack of communication. Please, today I've really got enlightenment on how all the pensions are working, and it is wonderful. I think I must appreciate this. Both ICA and the way you invest, the way it is taken care of, is wonderful. But now that misgiving in ICA is only very important that please communicate. I don't know how we can get into, because they were telling me that I'm not supposed to go to our office. I should go to them direct. And this is the first time I was getting this information. So it's important that they communicate.
Thank you, Semo. Seems you left before IDD had come in. Very final question from the far end there. Nehemiah, you can pass the mic.
Hello, members. Habari ya asubuhi. My name is James Nyamongo, and I think you have mentioned about health scheme in insurance. My question is very simple, although you have just said something, but there is somewhere that I have not been satisfied, and maybe some other members. Some of us, we are getting very low pay as retirees. When we wanted to enter into the health scheme, like for example, let me just put myself and some of the friends that I know, we found that we cannot enter because even the monthly payment, so that you can become a member, or you can be observed into the scheme or the insurer, you find that even the monthly payment is even more than the payment that we are getting. I don't know whether there is something that you can do in just our favor, because you can see where the lives of where Kenya has reached. If you can do something, we know that you are doing it. You are paying us according to what we were earning. But now, in that humanly, just assume it was you. Because some of us, we are suffering, and even our wives are asking us. You are telling us that you worked in Kenya Power. Some of the people are going here and there. They are being getting these insurance coverages. Why? Ama ulikura ulienda ukakura na mtu mwingine huko sasa wewe. My friends, just think it was you. I think Ernest is my friend. And you know me very well. I'm just very sitaki kwenda kuongelea huko mbali. Hii ni swali, na wakati nilisikia wenzangu wakisema nilikimya tu. Kasema nitakuja, and that's why I've come all the way from Kisii up to here.
Thank you for coming all the way from Kisii.
Yeah, because of that, because I've been thinking maybe unaweza toka jini, at least muangalie, because you know our files, you know what we get, and sometimes some of these things you don't even need us to come and ask. They are so plain. If you can see there is any way that you can help us, we shall be very grateful.
Thank you.
And if you can see there is a way you can raise that pay so that we can reach there, that one is also another issue. I thank you for that.
Thank you, James Nyamongo. I believe trustees have heard you clear, and they will respond. Same for Semo. Please, trustees, respond to the two questions.
Yeah, thank you. Thank you very much, Engineer Semo. I was one time my boss in technical services. Nyamongo, thank you also for the good questions. For Engineer Semo, I think that, and I think Steve has alluded to it, it's unfortunate that by the time you left, we didn't have what is called income drawdown. That is now domiciled within the scheme. When you left, the only option that you had in the DC scheme, and I think is good for the other pensioners, especially most of you don't understand, there is the DB and the DC, and by the time engineer was leaving, there was a portion of DB that he had to get. The portion of DC, which started in the year 2006, you are now to go and purchase an annuity out there, the insurance. I must confess that we've got very little to do, because the purpose of DC is removing that risk, is removing that responsibility by then, and now removing it from the scheme, removing it from the sponsor. That is why now you have to go and purchase an annuity out there. But after a lot of complaint, there was hue and cry from the membership and even from the pension schemes, RBA listened and now allowed us to establish what is called income drawdown. The income drawdown now, engineer, in this case is, instead of you going out there with your money of the DC, you've retired, you are worth 5 million, your amount in DC, a third, we are telling you, we are giving you cash, the remaining 2/3, go and purchase an annuity, the way you did. But now as RBA came in and gave us some relief and said, within the pension funds, you can now have a unit called IDD. Instead of the member taking this money out there, you now invest this money for this member for a period, a minimum period of, is it 10 years, the income drawdown? 10 years. So we are allowed to stay with your money for a period of 10 years. After that, you can decide, as indicated in the chairman's report with the IDD, in fact, the one I'll be reading in the next AGM, within a period of 5 years, you can transfer your now IDD, your amount, your investment in IDD to another IDD. But as it is now, so with the coming in of IDD, members have seen the benefit. Those who went to purchase, who are now with insurance, like you, that is why now they want to know whether you are alive. Yeah? But in our case, we have a system where the secretariat is able to monitor and know really you're up and running. So, and this now I'm directing to existing employees. Insurance have come up enticing employees, giving commission. Even Mulan, the hotel, they put a desk there and they call employees, unanunuliwa chai, they try to convince you why you must invest, put your money in insurance. What we are telling you, our IDD, we are doing very well. We got 13.8%, and we are only investing in treasury bonds, fixed deposits, which are more safer for now. So that is the only thing. But what we do, we don't just leave you like that. We try as much as possible. We'll reach out. The secretariat will reach out because you are still part and parcel of us. You're our pensioner. We'll try and see how you can be assisted. But for the existing, munasikia, mutadanganywa, na munaambiwa hiyo ndio tamu. But currently, our IDD now is worth 1.6 billion. I'm hoping 1.6 billion. That is the confidence the members have in us. So I encourage the existing employees, when you retire, remain with us, remain in IDD, forget about the language of the insurance. Sorry, I know we are fund managers here. Yeah, not insurance guys. Now, Nyamongo, you know, it's good to be fair. I know sometimes back, the minimum pension, nani anaosha? Please. Now, Nyamongo, there was a time we had a serious and in fact, even the whole country, the former president, the late Kibaki, had to increase the minimum pension to 25. And by that time, we also had some of our pensioners who were earning very low. And this is the scenario. Those employees who left many years ago, and they were earning very low salary. And you understand, and I'm now speaking as a union person. You know where you've come from. You know the salaries our members were earning that time. Even you management, the salaries were extremely low. And that is why now where you are. But we increased the minimum pension to 3,000. The minimum pension now, regardless of what you are getting, we moved it up to 3,000. We've had you. The only time as a secretariat or as trustees, we can now relook at that is when we have a surplus. When you have a surplus, we'll now go to the CEO, Dr. Sirol. Naenda ongea na board, tuseme sasa, we are doing well. Why don't we increase the pension of our pensioners? That is the truth. There is no any other shortcut. That is the only way we can help. But pray for us, pray for the country. We continue, as we've been told, we did 13%. If we do very well, as we continue, we sell our property also, because now we are talking of almost 4 billion, 5 billion. just lying. You can imagine that money. If we get all of that money and invest in treasury bonds, and we are getting 16%, will automatically be on surplus. Now, lastly, Chair, you gave me this opportunity to finalize on this bit, the finance bill. I'm not going to talk about the JCs, but I must share with you, as trustees, through our body called Association of Pension Trustees, the APTAC, we've been trying to lobby for pension, taxation of pension to be dropped from 65 years to 60. Currently, when you retire, and I'm sure those of you who have retired this year or last year, in your pension, what we are paying you, and maybe Nyamongo, this is another way of trying to help others, is to see into it that that taxation is removed. We've been lobbying on that. The other thing that we have also been lobbying through this association is when you are contributing, the existing employees, when you contribute, there is an amount, a cap that is given that you don't pay tax. That is up to 20,000. We were also able to lobby Treasury, and that was pushed to 30,000. The last one also is what we've been told about post-retirement medical cover, where now existing employees, for your information, I think we'll be sharing this in the DC. We've launched now the post-retirement. It was started this last month. So employees now existing employees can start contributing to the post-retirement medical fund. But now, KRA is also with us. They are saying, if you have to contribute, you will not pay tax to a maximum of 10,000. We've lobbied. In this finance bill, Ikawa, it has now moved to 15,000. So those three takeaways, those were our three takeaways in the finance bill that was withdrawn. Tumeelewana? Not that I am or against the finance bill, but I want to just to share with you that what we lost in the finance bill in this particular retirement space, those are the three issues that we lost. But we'll try, Chair, to lobby, because there is a supplementary budget, there is the negotiation that is going on. Whether the government will accept and reinstate those three, then that will be for our good. Thank you, Chair.
Thank you. Thank you. Thank you, Ernest. Now, before I conclude, I want to give a trustee a chance to maybe air his, he's got a few things to tell us. Colleague.
Good morning, members. I really want to, I know the trustees and the secretariat have really emphasized on issue of IDD, but I want to emphasize again for the in-service on the issue of additional voluntary contribution. Currently, you are contributing 5% as your contribution. We did a research and you realize, for instance, in the government, they are contributing 7.5%. In most other organizations, employees are contributing up to 10%, so that the employer is contributing 20%. I know this is an issue we have been discussing with the sponsor to see whether we can be able to gradually increase, even if it moves from 5% to 7.5%, then again in future we move it to 10%, where we were in 2002 before the crisis, the financial crisis within KPLC happened. But I want to call on those in-service employees, in order to avoid trivial pension, and the Secretariat have been doing very good work, that can we add something which is already allowed by RBA called additional voluntary contribution. This will give you an opportunity to earn a reasonable pension when you retire. And the biggest challenge again that we're having currently, we know where the background where we have come from, even as we have bigger numbers coming into retirement, we need to aggressively have a soul searching that what is my replacement ratio when I retire, replacement ratio. Yes, you could be earning 100,000, but also start as an individual and ask yourself, when I will retire, what do I target? I want 30,000, I want 15, or 40,000. So that is one area I'll really want to emphasize. For DB, even as your trustees, we are torn apart. We have very little headroom in terms of investment because of the risk. If you give us an opportunity as trustees, and we have a choice that individual member can choose and say, can you invest in a more riskier environment, and you not hold the trustees responsible, then it's worldwide, there is a choice where you can come and select, but this is still a process going on. So that you select, you want to invest in this, and you'll be knowing what risk you are taking. What is the risk appetite in DB might not be the same in DC. So let's clear on that. And also even during other discussions, we focus on that. Additional voluntary contribution is what I want you to have as a take home. Thank you.
Thank you very much. Right. Members, you are now requested to note the annual report that includes the chairman's report, trustees' report, investment reports, and the audited financial statement as having been received and adopted. And in conclusion, ladies and gentlemen, I would like to take this opportunity to appreciate all of you for attending today's AGM. I also thank those who joined us on virtual. More so, I really thank you for your patience. You have been such a good group. Similarly, I wish to acknowledge and appreciate the following. First is our sponsor for your continued support. We thank you very much for that. All our members for your active participation throughout this AGM and on all other occasions where your participation has been requested. Our service providers for your professional input in what we have had to do. The RBA for fostering a conducive regulatory environment for the retirement benefit schemes sector in this country. And finally, the Board of Trustees, the CEO and Trust Secretary, and the Secretariat for your dedication during the year. I now declare the meeting officially closed. God bless, and since we are concluding the DB AGM, I would like to, before we break for the tea, I would like to ask somebody to pray for us to close this meeting. Anybody who is willing to pray for us? We prayed when we started. You know what? Yeah, I'll announce that. Lucy, I can see even if you are hiding, wake up and pray for us. So I know this people.
Please, let us stand up and pray and thank God. In the name of Jesus, we bless your holy name this day. We thank you, Father, for the way you have been with each one of us. You have protected us. You have blessed us with long life. You have blessed us with healthy bodies. We thank you for continuing to keep us alive and to continue to bless our lives. Even to be here, it is a miracle, Father, for all of us, for which we thank you. For whatever, Master, has been discussed in this place, we thank you and we believe it is going to work for our good for us as we continue to be in this pension scheme. We thank you and we bless you for giving us journey mercies to this place, and we ask you to be with us, Lord, as we go back to our areas of residence. Be with us, keep us safe, continue to help us in whatever we are doing individually, Father, and help us to meet again because you love us and you care for us. Give us journey mercies back to our homes. In Jesus' name we pray.
Amen. Please keep seated for the time being. Keep seated, please. That marks the end of the DB AGM. Our sister scheme, the DC, are going to come after how many minutes, Chairman? We want them after how many minutes? Quarter two. Quarter two, you should reassemble here. That is the DC scheme. DB members, you can also attend if you have the time and we're ready. After 15 minutes, we congregate here again, and the DC will start their AGM. For the time being, please relax. Let's get out and stretch ourselves kidogo, ili tukirudi tuwe fresh. Thank you very much, and God bless.
DC members, please. We are behind schedule.
Ondoka kwangu shetani hapana, riswa ndani yangu niwe salama, Satan nionekane mbali na dhambi, naomba unisaidie.
Kindly join us. Lunch will be served after this meeting. Lunch will be served
unaochoma imani yangu, Bwana naomba unisaidie, unisaidie.
Thank you so much. Our choir.
Asante sana. Asante sana.
Thank you, choir. Thank you so much. You've done very well. Our technical team, please. Any discussion out there, please. All ushers, secretariat, please help us to have members settle. We want to start this meeting and finish before noon. Kindly, DB members, please allow the DC members to come in, or you can also join them. We'll have enough time to discuss during lunchtime.
Benefits Authority, contributions to the post-retirement medical fund, I would say, will be dependent on one, the members' keenness in securing their post-employment years. Number two,
which is a retirement, where we can look at early retirement, an annual medical cover.
The post-retirement medical fund was established. The fund was established by the trustees of contributions, and number three, the target medical benefit that they are keen on enjoying.
Tiso.
Tembea juu ya maji.
Haya.
Kenya Power, hakuna matata. Jambo, jambo bwana, habari gani? Mzuri sana, wageni
Karibuni sana.
Jambo,
Jambo,
jambo bwana, jambo bwana, habari gani? Mzuri sana, wageni wakaribishwa. Kenya Power, hakuna matata. Wakenya tujivunie kuwa Wakenya, nchi ya amani. Jambo, jambo bwana, habari gani? Mzuri.
Again with us. And then finally, one of our own, RBA representative, Anthony Chumo, was with us, and I think now he's with Yvonne Mudhui. Yeah, Yvonne, Asantini. Okay. And as you are told, we also have a chief guest, and I think it's just important that I introduce to him, because when you write the history of RBA, the successes of RBA in this country or globally, and you don't mention the name of Odundo, then I don't know, you know nothing. Sorry, Mr. Odundo, maybe Salamia too. He's a former CEO of RBA. And we attribute all the good things we are enjoying. He's the one who built a very strong foundation. And we are happy that those who are in leadership have continued to build on that. I now call the secretary to read the notice convening this particular meeting. Edwin?
Thank you, Chairman. So members, I will read the notice convening this meeting, and it reads as follows. Notice is hereby given that the 18th annual general meeting of the Kenya Power Pension Fund, that is the defined contributions, will be held on Friday, which is today, 5th July 2024, at Safari Park, Nairobi. And also through Zoom webinar, starting at 11 a.m. It's now 1 hour later, but I think we should be able to finalize the business of the day. And the meeting was convened to transact the following business. The first one is the introductions and opening remarks. Second, reading of the notice convening the meeting. Third, confirmation of the minutes of last year's AGM that was held on Friday of 23rd June 2023. Fourth, presentations of the chairman's report. Fifth, presentations of the fund's financial statements and audited accounts for the year ended 2023. Sixth, presentations of the fund's manager's report. Seven, presentations of the custodian's report. Eight, address by the RBA representative. 9, address by the chief guest. 10, question and answer session. Number 11, vote of thanks. And number 12, closure of the meeting. This notice was issued on 10th of June 2024 and was signed by E.K. Ruta, the Trust Secretary. Thank you, Mr. Chairman.
Thank you, TS, Trust Secretary. Now, we move to the next phase, and this is a requirement by RBA that as it was done during the DB, we were supposed to confirm the minutes of the last AGM. And I'm heavily informed that this was circulated or posted, shared with all the members 3 months before the AGM. And therefore, as a chair, I take those minutes as read. During the earlier AGM, I think there was a member who said maybe we need to improve on this. And I think we take note of that we need to have a provision of matters arising. And also, what was deliberated on. So I think we will make sure in the next AGM or this particular minutes of this particular AGM are well captured with the improvement that was proposed. So without much ado, I'll request that we have a proposer and a seconder confirming the minutes. A proposer and a seconder. Thank you, Austin. Yeah. Mpatie Mike aseme his full name so that for record purpose.
Austin Mjama, I propose.
Thank you very much, Austin. Can we have a seconder here?
Peter Natembea, I second.
Thank you very much. I hope there is tower in it. Thank you, Peter Natembea. Now, Chairman's report. This is one of the requirements that I must read to you. And kindly just listen. It's a bit long, but it's necessary. Distinguished members, it is my great pleasure to welcome you to the AGM and present an overview of our 2023 annual report and financial statements. Guided by our strategic plan, the fund continued in its quest to ensuring that our members enjoy a dignified life in retirement. The year under review saw us leverage our strategy to drive value creation and achieve a positive return. Despite numerous challenges, 2023 saw a boost from economic recovery and easing inflationary pressures, with the country recording an average of GDP growth of 5.6%. Headline annual inflation decreased to 6.6 from 9.1 in December last year, mainly due to lower transport costs resulting from reduced fuel prices. Currency, on the other hand, depreciated by 21% against the dollar over the year, marking its largest annual drop since the year 1993 due to trade imbalances, global economic conditions, negative market speculations and sentiments, and economic uncertainties. Overall, the board continues to play a central role in ensuring that our investments are well diversified to maximize returns while managing risk, ultimately working to secure the financial well-being of our members and beneficiaries. Ladies and gentlemen, during the year 2023, the fund achieved a modest return of 0.2%, which was an improvement from negative 3.1% reported in the year 2022. This was mainly due to book losses recognized from the quoted equities and the negative valuations on treasury bonds following the increased interest rates. Based on the new regulation to exclude unrealized gain and losses on bonds in interest computations, the Board of Trustees declared an annualized net interest rate of 4.12%. The fund value reduced marginally from Kenya shilling 17.6 billion to Kenya shilling 17.5 billion due to significant benefits payouts to retirees and adverse valuations in quoted equity and bonds. The IDD fund, that is the income drawdown fund, on the other hand, posted a net return of 7% compared to 8.4% recorded in the previous year. The decrease is attributed to increasing interest rates, which resulted to negative bond valuation. The Board of Trustees declared an annualized net interest rate of 13.13% based on the aforementioned new regulations. The IDD fund value increased to Kenya shillings 1.1 billion from 0.8, recorded in the year 2022. Currently, as we speak, it has gone to 1.6 B. We recorded 0.8 in 2022 due to positive returns and the significant number retiring members joining the fund. Overall, the Board of Trustees remains committed to investing in a well-balanced portfolio that delivers good returns to members while minimizing market volatility. Dear members, during the year under review, there were legislative and regulatory changes that were introduced in the pension sector, and these include, number one, the RBA notice effective from December 21st, 2023, which outlined that the net returns declared and credited to members' accounts will exclude unrealized gains and losses arising from the changes in the value of treasury bonds. Number 2, on May 5, 2023, RBA released guidelines on trustees' remuneration policy and schemes expenses. The objective of the guideline is to establish a comprehensive framework for determining and approving trustees' remuneration and scheme expenses. The fund is currently reviewing these guidelines to determine how to operationalize them. Number 3, on 31st October 2023, RBA on Income Drawdown Regulation 223 were also issued. Under these regulations, the following changes to the operations of IDD fund were introduced. Number 1, all existing income drawdown funds will be registered as individual funds within 3 years after the gazettement of the regulations. Number 2, the minimum membership period remains 10 years, and a member is permitted to transfer their benefits to another IDD fund after 5 years. Number 3, the maximum rate of drawdown was reduced to 12% from 15%. So that is the maximum you can withdraw as you invest in income drawdown. It was reduced to 12% to enable you to continue saving more. The fund is currently implementing the above IDD regulations and is expected to be registered by the end of the year 2025. As it was mentioned earlier, currently it is a unit within the Secretariat. It's domiciled within the Secretariat. The other 4 guidelines or communication we got from RBA, that was on that February 2023. The Court of Appeal allowed the implementation of the NSSF Act 2013 to proceed. The Act sets the statutory contribution at 12% of the pensionable wage, made of 2 equal portions of 6% from the employee and another 6% from the employer. Contributions under the Act are divided into 2. 1, Tier 1 contributions based on pensionable earnings up to the law earning limits. I hope during the member training you are taken through this, because at the AGM we are limited to explain to you on this. On Tier 2, contribution based on pensionable earnings above the lower earning limits. Section 21(1) of the NSSF Act 2013 allows employers to pay Tier 2 contributions to a contracted out retirement benefit scheme that it participates in order to, to a contracted out retirement benefit scheme that it participates in or opts to establish or to participate in. In the year 2023 August, our fund was registered to receive Tier 2 contributions subject to the provisions of NSSF Act number 45 of 2023. Our sponsor, that is Kenya Power and Lighting Company, applied for contracting out of Tier 2 contributions to the fund and received approval from RBA in November 2023. So we are happy that even these particular Tier 2 contributions we are now having and we are investing for you. Ladies and gentlemen, effective governance has been the foundations of the fund's sustainability over the years. The fund adheres to sound governance practices and complies with various regulatory instruments, including the retirement benefit, that is good governance practices guidelines of 2018. The board follows a comprehensive board manual that outlines best practices and procedures for conducting its operations. Additionally, the board has established several committees, one of which is dedicated to governance and compliance oversight. This committee allows the board to monitor the fund's governance and compliance status on quarterly basis. For more details on the same, kindly peruse through the shared annual accounts. You'll get all this. In terms of board composition, I wish to inform the members that 2 new trustees joined the board during the year. The 2 are Dr. Engineer Joseph Siror, who was appointed on 1st June 2023 to represent sponsor, and Tobias Sombe, who was elected by members middle management on 29 November 2023. The fund intends to leverage their expertise to continue steering the fund towards posterity. Dear members, the fund actively participated in both local and international awards, showcasing our commitment to excellence and innovation in the pension industry. In the year under review, the fund participated in the Financial Reporting Awards, that's FIRE Awards, where our scheme secured the first runners-up position in the pensions funds category. Our mobile app, on the other hand, was recognized as the best in the pension category at the Mobile Application Awards. This mobile application is intricately designed to provide you with a smooth and intuitive experience, equipped with diverse features that allow you to oversee your pension account. I encourage everyone to interact with the application and enjoy the convenience it offers. I think we deserve a clap for that. As we close the year also, our property development brand, that is Sakile Properties, also participated in the Real Estate 100 Awards, as well as the Top Star Brands Awards, where we were feted as the best pension fund in property investment for the year 2023, and best high-end properties developers, respectively. Through these accolades, we continuously strive to set higher standards and drive a positive impact within the pension sector. Ladies and gentlemen, the fund continues to roll out new products and services with a view of enhancing members' benefits and satisfaction. Among them are the Post-Retirement Medical Fund, the Additional Voluntary Contribution, AVC, and the Income Drawdown, IDD. Effective June 2024, and I want you to listen to this. Effective June 2024, the board introduced the Post-Retirement Medical Fund to enable in-service members to plan for their future medical expenses. The PRMF provides an opportunity for members to accumulate savings that will later be used for their health care needs in retirement. That is why today we have Dr. Odundo here. He'll be able to take us through this. The in-house income drawdown fund is another product that provides a member with a flexible and reliable alternative to grow their pension income. The fund has continuously made concerted efforts to generate competitive returns for the IDD fund and provide dedicated service delivery to the members. I think we have done that. And if you were in the previous AGM, you go to insurer, they will always be asking to call you whether you are still alive. Members are encouraged to familiarize themselves and take advantage of these products to ensure that the goal of Maisha Bora Uzeeni for all members is realized. Dear members, despite the prevailing economic challenges, the fund remains steadfast in pursuing its objectives outlined in the 2021-2025 strategic plan. The fund anticipates growth in the coming year, attributable to factors such as the introduction of NSSF Tier 2, as I mentioned to you. This is a big boost for us, which is expected to boost the membership and fund value and guarantee favorable returns in line with the bolstered market projections for the current year. Similarly, the forecasted growth in income drawdown membership and fund value is likely to be driven by good returns and a rise in retirement enrollment. The regulatory landscape is equally said to be active with the new policies expected in taxation, anti-money laundering, environment, social governance, that is ESG, post-retirement medical fund regulations, among other areas. The fund is well positioned to ensure compliance and leverage any opportunities that may arise. Similarly, we continue to forge ahead in constructing a resilient and flexible investment portfolio that resonates with the long-term financial aspirations of you, our esteemed members. To conclude, ladies and gentlemen, I would like to extend my heartfelt appreciation to all of you, the members of the fund. Your unwavering trust and engagement inspires to strive for excellence. To the sponsor, your continued collaboration and support have been pivotal to our achievements this year. To the board, my fellow colleagues, your strategic insights and governance have been invaluable. I would also like to thank the CEO and the Secretariat. Your relentless effort and professionalism keep our operations running smoothly. Last but not the least, I would like to recognize the regulator for their continued guidance and for fostering a conducive environment for the fund to operate in, as well as other stakeholders for their tremendous support over the past year. Together, we continue to build a bright future for our fund. Thank you very much, and God bless you all. Thank you. With the end of my report, members, I would now like to take this opportunity to report on 2 of the 5 minimum agenda items as required by the law for annual general meetings of retirement benefit scheme. Number 1, we are supposed to report on any changes to the benefits and contribution structure. I wish to report that there have been no changes to the benefits and contribution structure of the scheme. Number 2, we are also supposed to report on remuneration of trustees, whether there is anything that has happened, increment or whatever. Ladies and gentlemen, during the year under review, the Board of Trustees had the following meetings. Full Board, we had 7. Risk and Audit Committee, we had 5. Strategy, Finance and Investment Committee, we had 6 meetings. Governance, HR and Compensation Committee, we had 6. And then Project Implementation Committee, we had 6. I wish to report that there were no changes in the remuneration levels of trustees during the year. The total trustees sitting allowance for the year was Kenya shillings 12.57 million. It is recommended that the existing remuneration levels be maintained in the subsequent period. Having said that, the audited financial, having been previously circulated and taken as read, if you don't mind, and I think it's my obligation, with all that I've said, I will now call the auditor to give a brief overview of the financial statement and to read the auditor's report to the members. Thereafter, I will call the investment manager, custodian, RBA. I know already did an overview in the, maybe, unless you have something for DC you want to say. But with that, I think I will now call the auditor so that immediately after that, the service providers will take lead. So, auditor, karibu. Tumpigie makofi akikuja.
Good afternoon, members. My name is John Muhalia from Deloitte & Touch LLP, the independent auditors. I'm first going to go through the financial statements. So if you have the booklet, the financial statements are found on page 90. That's the statement of changes in net assets available for benefits. The net surplus from dealings with members for the year 2023 was 190 million, which is a makeup of 1.9 billion in contributions from members and benefit expenses of 1.7 billion. The investment income earned during the year was 214 million, which resulted to an increase in the net assets for the year of 211 million. Page 90 is the statement of net assets available for benefits. The scheme balance, and this is for both DD and IDD, is cumulative of 18.6 billion, made up of investment assets held of 17.3 billion. The current assets, these are receivables, including what is held in the bank, 1.8 billion. And the pending bills as at 31st December 2023 of 549 million. I'll therefore proceed to read our auditor's opinion. It's on page 88. We have audited the accompanying financial statements of the Kenya Power and Lighting Company Staff Retirement Benefit Scheme of 2006 defined contributions, which are set on pages 90 to 126 of the annual report. And this comprises the net assets available for benefits as at 31st December 2023, the statement of changes in net assets available for benefits, statement of changes in members' funds, and statements of cash flows for the year then ended, and notes the financial statements, including the material accounting policy information. In our opinion, the financial statements give a true and fair view of the scheme's net assets available for benefits as at 31st December 2023, and of the changes in net assets available for benefits and of its cash flows for the year then ended in accordance with international financial reporting standards and the requirements of the Kenya Retirement Benefits Act. And that's the end of our opinion. Thank you. Hand it back to you, Chair.
Thank you. Thank you very much, Auditor. Now that takes us to Fund Manager. Maybe for the Fund Manager, just be very, very extremely brief, because most of this was covered during the previous AGM. What you guys do? There. It will be projected there.
Who's projecting? Who's projecting? Okay, good. Members, Board of Trustees, members of the Secretariat, fellow service providers, good afternoon. My name is Bachu Mtsumi, one of the co-fund managers on the scheme. The management of the scheme is split between Gen Africa Asset Managers and Corp Trust.
Is there? No, just continue. Okay.
Right.
Yeah.
So in terms of the agenda, I'll be taking you through the role of the fund manager, overview of the macroeconomic environment, then we look at the investment report, and lastly, the outlook for this year. So in terms of the role of the fund manager, we basically invest the scheme's assets on behalf of the trustees. We don't do that blindly. We are guided by a policy document called an investment policy statement, and you'll see that a bit later on. But generally, it guides us in terms of how to invest the scheme's assets across the different asset classes as approved by the RBA. And those asset classes typically consist of fixed income, which is made up of your government bonds, T-bills, deposits. We also invest in local equities, offshore equities, and in rare occasions, we also do property and private equity. As fund managers, we are duly licensed by both the Capital Markets Authority and the Retirement Benefits Authority. We do presentations to your trustees on a quarterly basis, especially the investment committee, where we deliberate on the quarter's performance, and we also talk about the strategy so that we can optimize the scheme's returns going forward. And once a year, we do also present to members at AGMs such as this one. So in terms of the macroeconomic overview, GDP growth recorded at around 5.6% last year, an improvement from the 4.9% seen in 2022, which was a drought year. That slowed down growth. So the main reason for the improvement that we saw last year was as a result of an improvement in agricultural production, given that last year we actually recorded good rainfall. Proceed to the next one. In terms of currency, we saw the shilling depreciate by around 26% against the US dollar, and that depreciation was largely driven by the mismatch in demand and supply. We basically had a lot more demand for dollars than there was supply, and supply reduced because of the high interest rate environment in the US. That has led to many investors returning their US dollars back to the US to invest there. So that has led to a global decrease in the supply of USD. So with demand being high, that basically led to the depreciation that we saw last year. In terms of inflation, it averaged around 7.7% last year, almost the same level compared to what was seen in 2022. And there was a decrease in food inflation last year following the increase in agricultural production. However, that was offset by the increase in the transport and electricity index, which were largely driven by increases in the price of oil and the weakening of the exchange rate. In terms of interest rates, the red line shows where interest rates closed 2023, and the blue line shows where interest rates closed 2022. So you'll note that across the entire yield curve, interest rates were higher last year, and that still continues to be the case, and that was as a result of heavy borrowing by government from the domestic market. In terms of local and offshore equity markets, local equity markets struggled last year. Local equity market dropped by around 27%, mostly due to sell-off by foreign investors as they were concerned about the lack of dollars. However, the global markets did better. They improved by around 21.8%. as inflation moderated in the US. Right, so the asset allocation shows how the scheme was invested across different asset classes, and you'll note that local equities made up around 13.2% of the overall portfolio, and money market, which is basically your deposits and treasury bills, those made up around 11.9% of the fund, whereas government bonds and corporate bonds made up around 50.6% of the fund. Offshore made up around 4.3% of the fund, whereas your property, private equity, and unquoted equities made up around 20% of the fund. So next there you can also see the tactical ranges, which are from the investment policy statement, and that's the guidance I'm talking about around how we can invest the scheme's assets. And you can also see the RBA maximum limits per asset class, which is also part of the governance that the investment committee pays attention to. In terms of fund growth and performance, with the scheme closing the year at around 17 billion, as was mentioned, the return improved from the negative 3.1% seen in 2022 to the 0.2% seen in 2023. It was a tough year, and the industry average return, depending on which survey that you're looking at, most schemes did between 0.8 and 1% last year, depending on how you are invested, particularly how much you had in local equities. So for the schemes that had less in local equities, those did a bit better than those that had a bit more. But generally, that was the range of returns that we saw last year. So quite low, and thankfully, the RBA regulation on bonds has assisted in terms of improving returns, not just last year, but this year as well. Then just to close on the outlook, in terms of GDP growth, the projections from the IMF, World Bank, and Treasury are for growth of between 5 to 5.6% again this year, and still expected to be driven by agriculture, given that rains have also been good this year. Inflation is expected to remain within the Central Bank of Kenya's target range of 2.5 to 7.5%. It's currently at 5%. We don't see inflation causing any risk to the macro environment, and interest rates are likely to continue at the current high levels, given that government still has significant borrowing to do. Exchange rate that has stabilized, thankfully, and as a result, we've seen an improvement in the stock market returns. Global markets are still expected to do better, given the levels of positive economic growth seen there. Thank you. That's it from me. I'll be happy to take questions during the Q&A.
Thank you, thank you. Let's clap for him well, proper. Asante Bashu. Now we move to custodian. Custodian, just be very extremely brief, because a lot of legwork was done during the previous AGM.
Members, the Board of Trustees, service providers, good afternoon. My name is Paul Ngomba. I'll take us through the custody report. It's a combined report between ourselves and Stanbic. So the agenda is just basically to highlight the role of a custodian, our core responsibility, and some of our regulators, and just confirm the assets of the scheme. Next slide. So in terms of the operating licenses that we are guided as a custodian, we are regulated by Central Bank, being a banking entity. We also are regulated by RBA. We also regulated by Capital Markets Authority and CDSC, and other regulators come in place in our day-to-day operations. Next slide. Our core responsibility, we do safekeeping of assets. We also do trade processing, the investment instructions that are shared to us by your investment manager, and other payment requests. We process that. We do asset servicing, this basically collection of the income, dividends, the interest that is earned by the scheme, and we do reporting to your trustees and to you members of the scheme. I had mentioned earlier, we are licensed by CBK, we are licensed by RBA, we are also licensed by CMA. We maintain segregated bank accounts when we hold the investment of the scheme. That's to say the investment of the scheme do not mingle with the investment of the, or rather the assets of the bank. We keep proper books of record. This is what your auditor at every end of financial year they inspect. And we are both custodian, we have adequate operational system to perform day-to-day operation. I do confirm that the Kenya Power and Lighting Company Staff Retirement Benefit Scheme 2006, that's the defined contribution, are maintained under safe custody. All investments were executed as per the fund manager's instructions. I also confirm we received the monthly pension contribution from your sponsor. Reporting on assets held under custody was carried out during the year to your trustees and to the regulator RBA, and the assets held are detailed in the financial accounts that the auditor has just confirmed. That's the end of the report. I'll take the questions and during the Q&A. Thank you.
Thank you. Thank you very much, custodian. Now, I don't know whether RBA, do you have anything to say or maybe, okay. Tumpigie makofi RBA pia. He heavily did it during the DBAGM. And now this takes us to the sponsor. And we want to get the remarks from our sponsor. And this will be done by the CEO, Dr. Siror. Karibu. Tumpigie makofi daktari akiingia.
It's a wonderful good afternoon. Good afternoon, ladies and gentlemen. I'm really honored also to be here today with my former boss. My longest employer happened to have been Kenya Revenue Authority, where I joined in the year 1998. And at the time, one Dr. Edward Odundo was the commissioner of VAT. So before we donated him to start RBA, he was one of us in the Kenya Revenue Authority. So Chairman, Board of Trustees, this is Kim Ernest Nadome, Chairman of the Board of Trustees, DB Scheme. I think he is already in absentia. My fellow trustees, CEO and Trust Secretary, Edwin Ruto, and your Secretariat, representatives from Retirement Benefit Authority, service providers and invited guests, members of the scheme, ladies and gentlemen. Allow me to start by saying that I'm very delighted to be part of this pleasant occasion to celebrate with you and recognize the effort you've put in throughout the year as KPPF. It's a pleasure for me, for the first time, to join the Kenya Power Pension Fund family in such a ceremony, and I thank you for inviting me to spend this joyous moment with you. Ladies and gentlemen, the Kenya Power Pension Fund provides a critical service that affects people's lives in a profound way and at critical points. It is your service that ensures our financial and social well-being is taken care of beyond employment, thus giving us assurance of better days after retirement. Employees are the most valuable resource to a company or organization. At Kenya Power, we recognize the invaluable contribution of our staff to the overall performance of the company. Indeed, I think this has really been my key focus area, even when I took over the helm 1 year and 2 months ago. Therefore, we are continually benchmarking with global best practices to ensure that their welfare and that of their families is protected. Having in place a pension arrangement, as we do have, is a clear demonstration of the company's keen interest in our employees. Ladies and gentlemen, as you are aware, our company has experienced many changes in the recent past, from change of employment terms of senior staff, from permanent to contract terms, to changes at the top leadership. A lot has indeed happened. I wish to take this opportunity to assure you that even with all these changes, the company remains steadfast and is committed to support the fund to realize its mandate of providing pension benefits for all eligible employees of Kenya Power, KPPF, and New Pair. This has been done and will continue to be done through timely and accurate remittance of employee and employer contributions to the fund, including the NSSF Tier 2 contributions, which I noted the chairman did actually mention about what is happening in that space. On the same breath, I challenge the fund to live up to its mandate and provide value for its members. This they can achieve by coming up with more member-responsive initiatives and programs, such as the income drawdown. I think also a lot was talked about in the earlier session, or in the earlier AGM, whose success we applaud, and recently established post-retirement medical fund. I think I also recall that members or the retirees were really keen on this particular product, and I noted there was a document which was circulated, but I think the trustees and indeed are really willing to be engaged for you to know more about this particular product, for it is indeed quite important, and it's most unfortunate that at the very time of need is when those who are meant to provide those services start bolting away. But I think as a fund, we are committed to our retirees, and that's actually why such products will continue to be produced and even to be refined so that they can better serve you. Yeah, this came into effect, that is the post-retirement medical scheme, came into effect on 1st June of 2024. I specifically challenge my fellow trustees to be consistent in the discharge of their fiduciary duty so that the fund can achieve and exceed its member expectations. Ladies and gentlemen, as I conclude my remarks, allow me to once again acknowledge the members present and thank them for making time to attend this event. Let me also thank the Board of Trustees for its stewardship and management team for working tirelessly to ensure the fund offers quality service to members. We are proud of you and are happy to be associated with your success. Thank you all, and God bless you.
MD deserves a better clap. Tumpige makofi. Thank you very much, MD. I will now hand over this session to the co-MC, Joseph. You can take over, and then later on, at the tail end, I'll get it from you. Karibu.
Thank you. Thank you so much, Chairman, for the opportunity. I want to request the technical team just to project something in Kericho. I know the trustees have spoken about the post-medical retirement fund. They have spoken about AVC, additional voluntary contribution. Trustees have also mentioned intensively the IDD. So they have spoke about the services that we are offering, but only one service, Chair, that was not mentioned. When you're going for retirement, you need money, you need medical care, and you need accommodation, and we can provide that. Technical team, please, in a few minutes, just before we invite the guest of honor. Thank you.
We can allow the guest. If,
Are we ready?
Yeah.
Technical team, then we can move if you're not ready. branded t-shirt for team. You can project the profile of which I'll not read. You can project, please, the profile of our chief guest, Dr. Edward Odundo. I just want to mention briefly that Daktari is, will I call the founder of what we now call Retirement Benefit Authority. He made a lot of contribution to this fund. And besides that, Dr. Dundo is an author. He's authored 3 books. One of them is here, and you can pick it from him after this. It's called The Doctrine of Entrepreneurship. Those who are starting, you can have this handbook from him. Dr. Dundo also authored a second book called The Doctrine of Strategic Planning. Please have this book if you want to be like what he is. He has an illustrious career, which you'll be able to see from the projected profile. The last book Dr. Dundo is done is called Legacy and Exit Strategy. I think this is a must-read book for all the CEOs or all the GMs, all the managers. How do you want to exit the place? Please put your hands together to invite our chief guest, Dr. Edward Odundo, who has been with us since morning. Thank you so much, Daktari. Thank you. Thank you.
Good afternoon. I think I've been called about lunchtime, and then I was given 10 minutes. My lecture, I'll take a bit of your time, which for question and answers, maybe another 5 minutes, because what I want to talk about might take more than 10 minutes. I hope you won't mind. First, I would like to thank the Board of Trustees, the Chairman, thank you for inviting me, and the CEO. Your CEO was one of our staff, and I'm happy, I feel proud when my staff take over as CEOs. Normally these days I teach about board dynamics, what happens in the board, and what happens in the board is different from the actual things you read in the book, how the board should behave. But when you're in the board, it's a completely different thing. But that's a different topic we shall talk about later on. I always say that when you wake up in the morning, first thing is to be grateful that you're alive, and you thank God for it. And I think that is what most of us do. And it's a blessing for me to be here with all of you, just to share some of my experiences, both as a regulator for almost 16 years, which was a bit too long to be a CEO, and also my experience as a retiree. Those are two different worlds. I always tell people that I pushed a number of policies through your throats. Some of those things don't work in retirement. They are just theories. So I'll be talking about them, because I think those are things you learn. I was the president of pensions worldwide, and there are many good things and also some things that you learn. You think, I'm going to make the life of a retiree better. You are not a retiree, you know. Until you get there is when you know that there are certain things that must change. Okay? And I think it's important that we share that experience. Normally I tell people that I'm currently on 6th floor, room 6. And one of my colleagues here, the engineer, we are on the almost 67. So where we are going is very near, isn't it? If compared to where we've come from. And the chances of doubling our years from 66 times 2, 130, I don't think some of us will be there. So we have to just accept our circumstances. I was looking at a story of somebody who is 96. Water does he really need much? His desires are really low. I mean, you really at that age, you don't expect much. You know what was his biggest worry? Every time he sleeps, dreams, and when he wakes up, he wonders whether he's in heaven, in hell, or he's still on earth. Because you're not sure whether you'll be waking up the following day once you reach 90s. It's not true. You're not sure. Because so many things have happened. So you are not sure whether when he wakes up in the morning, whether he's in heaven, in hell, or he's still on earth. So he's a bit worried about that. So as I told you, I'm 66, and doubling our years is not that easy. But there is nothing wrong with that, because I always tell people that 1 to 64 was young. And then when you reach about 65 to 80 was middle age, and then 80 to 90 or to 100 was long-lived. But above that, you would just say, you expire. You don't die. So you just go, And now I would say that 60 to 64 is Gen Z, Generation Z. Okay, so we are not that badly, but me and him, we have already passed that. So 65 to 80, we are just now millennials. And then above 100, we have people who are normally rich, that's long-lived. But the certain things that happens in life that we must accept. Your body changes, is natural. I was looking at my statistics. Once you reach 65, the likelihood of your husband having prostate is actually 99%, because at 65, your prostate enlarges automatically. You cannot do much about it. You just have to accept. Some things happen. You're told, do so this and this, that did not happen. And once you reach age 80, you become an octogenarian. Forgetting is normal. And many other things happen at that age. You forget even you have my mother, sometimes she forgets whether I've said hi to her or not, whether she has eaten or not. She says, have you eaten? No. And she just eaten a few minutes ago. So you can fight with the person feeding her that you're not giving this person food, but she's just forgotten because she has dementia and many other things. So when you reach above that 80, then you go back to napkins. Napkins is normal. My mom never used to want napkins, but when she reached over 8, now she has accepted that this thing is natural. And that time now you are at mercy of the basically the caregivers. So we have to accept that some of these things happen. But you are still young. What's your exit plan? Okay? Do you have an exit plan? How do you try to transit from working life to our age as you go on? What I find quite interesting, between 60 and 65 is where people have a lot of challenges, a lot of struggles. But of what you're going to happen, what you're going to do. But above 70, as you approach the other side of life, you tend to cool down because your desires go down. You find the house is full of clothes you don't put on. Suits are there which you are putting on, you can't put them on anymore. Shoes, so many things. So you just start giving them out. And this happens. So I think we have to prepare ourselves that life will change and things will change as time goes by. I'll be talking about two things, about my retirement, what you do or what has happened. Then I'll be talking about what happens in retirement. Okay, so I'll talk about the 5 mantras, because when I retired from RBA, I set up School of Pension Retirement Studies. But then also I've learned quite a bit of things that money is not the most important thing in retirement. We all think money is everything. So we buy so much, we buy this and that, but that's just part of it. I'll be mentioning to you about it. And then you can also make your own decision on the way going forward. Because some of my experiences, maybe you will try and they don't work, but then it doesn't mean that I failed. At least I told you what happens. So I always say to people, and one of you, that please start consolidating when you reach 50. Start consolidating. And I would suggest that, all of you, I teach at the University of Nairobi, and I would like you to take notes. Small notes. Your handwriting, you're the only one who can read it. Apart from the doctors are writing, and the one who some people can read, some people cannot. Just take a few notes. What I'm going to show you here is just a brief, but most of it will come from what you learn. Once you reach 50 and retirement is 65, 60, it's always good to start consolidating. I always advise at that age, please do away with some of the assets that you have which are not serving you well. Start downsizing, decluttering. You declutter, keep seeing so many things you find you don't need. And I always tell people, I had a friend of mine whose wife passed on, and the following day, her room, so many ladies were there sharing all her things, which is in that room, and maybe she was keeping them for other people, for her own use. So at 50, started decluttering, because I had some land near the lake, and when the rains came, half of the land went with the water. Who do you complain to? At least if it was somewhere in Nairobi and somebody grabbed it, I'll go to court. They say somebody has bragged my land, corruption. But when the water goes with it, who do you ask? Nobody. Already you are worried about your medical cover, and that gives you stress. Then you start getting sick. Then it becomes even worse when you get sick. But when I introduced it, at least that company, we have about 5 companies in Kenya currently who have, I think there are more who are coming. There's APA, you can write that for yourself or information for your, you can use it elsewhere. There's APA, that's the first one who did it, and I took it with them. There's CIC, there is UAP, there is, I think there is UAP, there is about 5, I think I wrote them somewhere. Okay, I try and remember. Yeah, I've got it. APA, UAP, Britam, Jubilee, Sanlam, CIC, Liaison. I'll repeat, APA, UAP, and then there's Britam, then there's Jubilee, Sanlam, CIC, and Liaison. That's the ones I know. Maybe the others that you might get. But the first one was APA, but the rest have followed suit because I've realized it's a necessary cover. And this cover that I took, the time I was taking it, I think, is it possible to just go to the table? I'll show you something about the table, then I'll talk about it. See this, now the trustees, leave it there. They will not have a chance, the benefit of seeing what is there, but this is available, okay? So this is the generic sort of, it applies to most of these schemes. It might have been improved. By the time I took it, my inpatient I took was 5 million. The outpatients I took 200,000. And I decided to take, you can take the bronze, which is like 500,000, outpatient 60, silver 1 million, outpatient 100, gold is 3 million, outpatient is 150. So when you're negotiating with the insurance company, you can actually improve depending on relationship. But I took the one of 5 million and 200,000. And why I did this is when I got my first, when I left employment, I was paid a gratuity. And most of us, when you have a gratuity, the first thing you buy a matatu and a few other things. That's typical of Kenyans. Or you start a quail business, you just find out what people are doing. If everybody's doing chicken, you jump there. You also start your chicken business. But one thing I did, I bought a medical cover. The medical cover that I bought was for 5 million. That's me and my wife. It's joint. We bought a joint one. Make sure it's joint. But the outpatient, normally, the 200,000, we decided that she takes 100, I take 100. Ukimaliza yako, pambane na hali yako. You know, so she has 100, I have 100. So I use it. If I reach 100, I stop there. Last year I finished mine. But her, she kept hers. She finished hers the other day. So everybody had to just divide. But you are free to decide that 200 can serve both of you. But we just found it that you have yours and I have mine. So that's a general agreement. This particular cover, go to the next chart. Yeah, the way it works is this. If you are a young person of 20 years and you take a cover today, the premium, like for platinum, which I had, was 2,754 per month. So if you take gold, for instance, you only pay 2,000 per month. If you take bronze, it's 1,200 to 65. And if you're 20, this cover will go for the next 40 years. So you know you're retiring at 60, isn't it? So it is 40, 20 plus 40, that means it goes up to age 60. So you will find out where you fall yourself, what age you are. If you are 45, know that you are required to pay about 10,520, or if you are 40, for instance, you'll pay 7,355, but you only pay it for 20 years. I mean 20 years, so that by age 60, you stop paying. And if you pay monthly, it's okay. It's good for somebody who's young to start paying now. But if you reach my age when I left, go to the next chart. Next chart. I left employment at 59. But I decided I don't want to work anymore for government, for anybody, work for myself. So at 59, I was required to pay 228,000 per month for 1 year. Because the idea is to accumulate 2.5 million. So if you have that lump sum somewhere, then you can easily just put it in the insurance company, take that cover, and you stop paying. It's for life. You get me? It's for life. I don't pay medical cover anymore. So immediately I jump from employment to this cover. Me, I'm covered like anybody else. I get all the benefits like you. There's no difference. So you put that money there, and that means if you're able to accumulate it, the math's very easy. So for you people that you are starting your in-house one, then you can have better schemes than, okay, we go for insurance company. You can also, maybe at the end of the retirement, they can still buy cover for them. I know I've seen that with a number of insurance. Shell is doing it. They buy for you, and then it's now you and the company. But then once you reach age 60, now you stop paying. So me, when I left, the following year I was age 60, then I just took my gratuity and paid for that medical cover. And most of it, my gratuity went there. That's what I did with my payment. So I knew that was necessary. Then after that, when I was out there, I was not sure, because this was a new product, whether it works. So one day I had a cough, I went to Nairobi hospital to see whether it's accepted. I gave my card, and my card was accepted, because you're not sure whether it's working. My wife had an accident one time along Thika Road, taken to Aga Khan, and she was treated like anybody. She was accepted and treated. There's a card there. This was this APA. The card has only my name. She also has the same card, and it has only valid from 2017. There's no expiry date. Why? Because expiry date is when I go to my maker. Isn't it? That's the expiry date. Because I paid the one off, and it will just be there. Now, yesterday they gave me a virtual one. Because it got spoiled. I told them, why don't you give me a new card? I said, no, we have virtual one. So they sent me a virtual one, which is on my phone. But before, there was a card, which I used to go with, give it to hospital, and put your finger, and you're done. Okay? So for inpatient, she's 5 million, which basically both of us for 1 year. And rarely all of us will be sick. But outpatient, you find everybody has challenges. But that one, the good thing about this is a one-off payment, and then you don't think about it anymore. So if the employer can help you have one, it's something I really would say is a very good thing you did. I was the first chairman of the Public Service Pension Scheme, and I had 3 things that I told them they should have. One is have a good pension scheme, which they are doing. Then they had to introduce the post-retirement medical cover within the government system. What I was happy that the ministry actually worked on that policy paper. We finalized with it, and even the government put seeding funds to it. So it's something that, because civil servants, when they retire, they don't have anything. And that was something that was really pushed, and it's doing very well before I left. So why I say this also is because I had a friend who had a challenge that he was unwell, but he had a BMW, he became sick, and we had to collect money for his Arambe for treatment. We sort of delayed, and my friend passed on. So after that, we had to do Arambe for his funeral. And by that time, we needed 500,000. You know how much we collected for the funeral? 3 million. Yet we could not collect 500,000 for his treatment. But 3 million Kenyans can collect, because we are the ones going to eat anyway. But when this guy was alive, we were not ready to collect that money. So you have to make sure you have your own arrangements, you know. Children can help you But when you have your own arrangement, it becomes much easier. And we did that. My card has helped me quite a bit. In 2006, I had colon cancer. So I was to be operated at Nairobi Hospital here, 7-hour operation. Some doctors who are very good there. And the difference between you and me is my colon is half. Yours is full. So when you eat food, you can keep it for long. When I eat food, mine, I don't keep it for long. That's the difference, okay? But otherwise, we are all the same. What I know is everybody has cancer. That's what I know. When you have that disease, you really read a lot. Everybody has cancer is only how it mutates and how you manage it. And there are ways of managing it. You have a network, so people, if you have people here have such challenges, we can have a private chat on how do we manage some of these things. Okay, I always tell people. I'll give you my number, by the way, because in retirement, people don't call you. My number is 0726. I'm not worried about you calling me. 664422. 0726 664422. If you don't get me, send a message. I'll reply. Because what I'm seeing on my phone these days are promotions from nowhere. There are so many. This promotion, this vehicle is being sold here, those are people call me. My friends don't call me anymore. They stopped calling me. Okay? So these things are very many. So after that, when I was sick, that was done in Nairobi Hospital. That was done in 2006. But then when COVID came, we were one of the first people who got COVID. So that time I was taken to Karen Hospital. You're put in a room alone. Nobody comes to everybody. People can't visit you there. The guys come in white. So you wonder what next. Then after that, I spent 1 month in my house, in a room alone. The food is being given under the door. You know, you finish that food in plastic, return it. It wasn't a very good experience. But when I came out, that was paid for by my post-retirement medical cover because I already left. Then I happened to get sciatica. You know what sciatica is? It's a common disease which I call it occupational disease because of sitting. As if you're a manager, you sit for so many years. Over 40 years, you're a GM, you're a CEO, you're what? Most of the time you sit. And then the vertebrae 3 and 4 sort of separated because you are sitting so much. So every profession, they have their own disease, eh? So check, make sure you check. So because when they separated, now it affected my right leg. And that's why you find that some people walk with throwing their legs. What happens is when that happens, when they separate, the bone presses the nerve. So the blood doesn't go to the legs. In fact, my doctor at Aga Khan, I always tell people, he's a good doctor, he's called Dr. Fazal. I found him in Aga Khan. I was introduced by my doctor. What he told me that he was worried was not the pain in my back. You know, in a spinal surgery, it's very sensitive. So, and I was very scared, but everybody was scared about spinal surgery, even my family. If you tell them I'm going for spinal surgery, they know if you might not, they go there, you might not come back. But his worry was that if I delay, the toe is the one which will, because the blood is not going to the toe. So you lose the toe. And if you lose the toe, that's why you find people walking with their legs like that. And I didn't realize that until I went to him and told me to stand on my knees, and I could not stand on my knees. He said, yeah, my problem is here. And he has to do this surgery very fast. And because of technology, these days they don't cut your back. The first spinal surgery person I went to, he told me how he'll cut the back, join the bones, and put a screw. But when I went to this other doctor, I was advised to. And both of them are just along that Aga Khan, the spinal office or hospital next there. This Dr. Fazal says him, I think he used to. The leg. So I was okay. And they told me, go home, because if you stay in the hospital, there are other diseases. So just go home and recuperate from the home. And that was spinal surgery, because if a mistake is made in your spine, you may never walk again, you know? So when you go for some of these things, you have to be very, very careful that you don't find yourself in those kind of things. But these things happen. And that was like 700,000, and it was paid for by my post-retirement medical cover. And it would have been quite expensive to do this. So I'd like to encourage all of you, please push for this thing, even if it's the employer doing it, and it's necessary, because it will help you in retirement. Because that is the most important thing. Cash you can have, but then now I've told you, cash, land, whatever, will not help you in retirement. You cannot change. This guy died, yet he had a BMW. The other day, I think the wife was selling the BMW. If they sold that BMW, maybe they would have gotten money to take him to hospital. So that is the first thing. I note that as the first thing that's important. Post-retirement medical cover. Number 2, I know I have a very short time. Liquidity, cash. Not cash, go to ATM and produce money there. That's what you need. Why? In retirement, you have no cash. Most of the cash has gone. When you're working, every month you get a salary. But you stop working, there is no money. Why? You need small cash. When I was CEO and commissioner, these guys used to give me 7 newspapers: Nation, Standard, Taifa Leo, we call it Harvard, all these things, they're being brought to you to read. The day you retire, you have to buy for yourself. Do you have to buy the 7? No. Do you have to buy 5? No. I started by buying 2. I was not used to buying papers for almost 30 years. And it became very difficult. So sometimes we go to the club and read the paper from there. These days, I just read it from the phone. Just read a few things from the phone, because you find, not that I can't afford, but I find it's quite difficult. But you need that small money to keep you going. And this is where pension now comes in. Pension or your gratuity. I took a pension, but you can take gratuity, it depends. But I say what I've done, you people can decide what to do. And why I did take a pension, it was that I didn't want to get involved in the investments. Sometimes now when you take a drawdown, so you want to know how much was the return last year, went down, and a friend of mine took a drawdown and tell you what his experience was. So mine was not much. Mine was not even indexed. It was fixed, where you are just paid one figure per month. Okay, for many years, the value might come down, but if you can take indexed, then it means to be changing depending how the economy performs. And what the insurance companies normally do, if you take index, it's always lower than the fixed one. So me, I just say, you give me my 100,000, whatever it is, let me get it every month. So I know every month on 25th, it lands from the insurance company. So that's my income. Every month I check whether it has come. Same with my younger brother, also retired. So both of us, we have that's our income. So if his come, I know mine is coming. So if you're in the village, we can always take you to buy, you can buy for you meat on that day. So it depends on who gets his money first, But at least you go to the bank statement or something. Because if you stop working and you're used to seeing salary every month, it becomes quite a challenge. And the worst is, pension is very little. That's one thing I can tell you. Pension you're going to get is like 10% of what you have accumulated. In other words, if you have accumulated 8 million, you'll get about less than 80,000 shillings. Okay? If you buy a pension today of about 12 million, that's when you'll get 100,000. And here you are a CEO earning almost 1 million shilling. And now you're getting 100,000. 900,000 has disappeared. And you're used to it. Forget about taxes. It just disappeared. So you find most people in Kenya, their pension is like 40,000 and below. And these are people earning over 500,000. So you find that if today your salary is like 500,000, you'll be getting 50,000 every month. That's very little. And that's why you find there's a need maybe for making a separate additional contribution for your own. Because the one thing you should do, work out, ask your pension manager to tell you how much pension you will add if you leave today. And you get a shock of your life. Because people normally wait until the last day is when you realize that what you're going to get is very little. So what I'm telling you, what you have accumulated today, just take 10%. Remove 1/3, then what you have, take 10%. That's what you're going to get per month. And if you are below 65, KRA will tax you. No, I was also in KRA. They will tax you. Okay? By the way, when I was a tax commissioner, I'm the one who made that mistake of taxing pensioners. Because that time, the demand was revenue, revenue, revenue. I went to RBA for 16 years, trying to convince my fellow commissioner at KRA to change that rule. They have refused. They asked me, but you are the one who came up with it. Why are you wanting to change it? So when you do some of these things, please be careful. It will affect you. Because you know, you're VAT commissioner, you tax this, you VAT this, and all this, and it becomes that but at least one thing they agreed was that once you reach the age of 65, you don't pay tax anymore. It's something that I introduced. I wanted it brought to age 60. About a year ago, 2 years ago, parliamentarian wanted to change that rule. Together with RBA, they wanted to change it that because they want to increase revenue. They do away with that benefit. So we had to lobby. I got retirees, we got together and went and saw parliamentarians, told them, you are ready, our pension is very little. Most pensioners get 2,000, 3,000, then you want to tax it. So we convinced them, so that was retained. So anytime they bring it, we'll definitely defend it very seriously. So when I reached 65, I wanted to see whether it is there. It's not there. So me, I get my pension without tax. So anytime they start that story, because these are not retirees, we have to fight and make sure they don't. So above 65, there's no tax. Other countries, even food, if you go to buy food in a shop, VAT you don't pay. Because you're a senior citizen. You pay tax all these years. So why should you continue paying? So that was something that worked very well for us. You can take a drawdown, it's also an opportunity. But what happened to a friend of mine who had a drawdown the other day, he was told by the insurance company that his monthly pension has reduced. I know he's already used to getting that money. Then when he asked, he was told, there's a bond valuation. So he started a big war. So I said, okay, so you see, I said, you are better off before, now it depends on the economy. So you are free to go for any, but think about it very closely. Number 3, please don't go into retirement with a loan. Don't try, when you have a mortgage, and I've seen people doing that, and you think that you're going to do consultancy. May I do consultancy for you and for Alban? They don't pay you on time, sometimes they don't pay you, it takes so long, and even the consultants I do locally. I teach at the University of Nairobi, basically part-time, for the last 13 years. But if they don't want to be full-time. So they also pay you, lecturers are not paid as regularly as possible. So you cannot be able to sustain the monthly repayment of mortgage. It looks as if it is possible because you think you'll be doing so much. You can get a business from government, but it takes long before you are paid. So it distracts your income. But so if you, that time I told you to start consolidating, you prepare so that by the time you leave employment, the house, especially the house you live in, matrimonial home, should be loan-free. So that those other incomes, the other houses you have, those ones you can decide what to do with it when things get bad. Okay? So that the house you stay in is loan-free. The only thing like I pay is land rent and land rates. Okay? How we eat now in shauri yetu, tunapambana nayo. But you pay land rent and land rates. But the house is it's no longer on mortgage. So you work when you're consolidating to make sure that your house loan, your matrimonial home, is loan-free. That way you are at least happier that at least you have somewhere you can put your head, because it becomes a big challenge if you have a house and you don't have a house and you've been working all these years. I know some people who had houses and their houses have been sold because they thought that business is there and the real business is not there. And let me tell you, when you have a loan with the bank and you go into arrears 3 months, they come for you. When I was a CEO, the bank managers used to come to my office. You don't go to the office. They look for you. You want this money, or you want this. But when I left, because I had like a small loan, now the lady was not calling me. The secretary, some assistants and those were calling me. Your loan is in arrears. I said, why can't the manager call me? He's in meetings. She's in meetings. Now she has no time for you, because she knows you are gone. So, and when I call her, I say, why didn't you call me? Because I thought we were dealing at our level. He said, no, that's bank policy. It's a bank policy, so it's somebody else. But before, they used to come to my office like every day. So things change, and you must be ready to live with that. So make sure you don't go into retirement with loans, so that at least you are free of loans. And that's what I've taught most people, and those who are doing it. At least go, even if you are going to be having nothing, start a clean slate. Somehow you will survive. But so long as nobody is calling you every day that you haven't paid. Okay? Then I tell you the fourth thing is make sure try and get something to do. Business, or do something of your passion. Something which makes you, because when you have a lot of time, it becomes a challenge. When I retired, I used to go and live, yes. My wife was still working, She had retired. So every morning, before she never used to ask me what's my program for the day, because I would leave and go, and even when I'm on leave, I'm at home. But when I was retired, then she started getting worried. What is this guy going to do the whole day? Then we were left, me and the house girl, the two of us in the house. So in her mind, she wondered, what are these guys doing the whole day? What are they doing the whole day in the house? Just the two of you. So I had to make sure I go to lecture, do a few things. But not every day you are lecturing. So it's important that you get something to do, at least to occupy that time. Because that time can be a challenge. Because when you start working, you work like the whole day. I used to come late in the evening. So somehow you have to keep busy. One time I did some lectures to some university lecturers on the same. And as I came back from Nakuru, the lady who I carried, a professor, she told me, Dr. Dunda, what you are telling us, I think is true. My husband retired, and these days he's become stressed. I said, oh, what? Well, why? This guy, before when he was working, he rarely called me. Just called one call during the day. How are you? Fine, fine. These days he calls me 10 times a day. But every time, because he's idle, You know, women have a way of managing their social life. Men don't have. We are so dependent. So now when you are left alone, now the person, because your friends are not calling you, nobody is calling you, she's the only one you can call all the children. Children also, you don't want to disturb them, so you call your wife. So this guy called me 10 times a day, and I'm working. Before he never used to call me. I want to go to Chama, he wants to take me to Chama. And he goes and he sits there and waits for me to come out. And before I shall go to Chama, come back whatever time. And they get even worried that you are coming late. And the lady was going and coming late. When she comes by 5, 6 o'clock, the man wants to know where she is. And that was not an issue. So a lot of separations take place after retirement because of this kind of things, which was not necessary. Because she gets so frustrated that this guy calls every 10 minutes, half the time he wants to be telling Shama, what? So men, we must plan how we can use our time. I know we have challenges, but we force ourselves to see how we can also organize our time. So it's important that we organize our time and we have something to do. So get something to do which will keep you going. The number 5 is please be close to your family. It's critical. Okay? Be close to your family. As a CEO, as a commissioner, at those levels, I had very many friends when I was working. But once I stopped working as a commissioner, as CEO, I used to have 3 phones. After time they are ringing. These days, have you ever had this phone ring? Nobody has called it. Okay, but when I was the CEO, the phones were ringing, all of them. Sometimes you give it to people to help you receive them. But once you leave the place, that is the end of it. And that's the real life. I used to say when I was CEO or commissioner, in December I used to get a lot of gifts. You take gifts, they bring you T-shirts, what. KPLC also used to bring me a few things. Your pension scheme, these days they don't. I think my friend there knows. So these things were not for me, they were for the office. You understand? The benefits were for the CEO, not for. And my family thought those were mine. Even I got used to it, I thought those were my gifts. So those were not mine, they were for the office. So once you move, it moves with the office. So nobody has time for you. Nobody calls you. If you go back to your office where you used to work after retirement, even getting in is a challenge. Nobody wants to attend to you. You're on your own. Me, when I left, I have never gone back to RBA to do what? I didn't care because first of all, the people there don't know you. You tell them you're working here, so what? so what? Doesn't matter that you're working here. Who cares even if you're working there? So you just make sure you're on your own, you do your things alone. So it's important that, because people I call now is my wife and my children, maybe my brothers and so. Those are the people I call already, and they're the ones who can call you. So you have to make sure, because if you let your children go when they're very early, you don't call them, you're not close to them. So when you retire, see, they're used to that. When you start calling them, they start wondering, why is this Mzee calling me? But before, because you had made friendship, it's like a normal friendship. So you become close to them, so when you call, it's easy. And when they call, you know who is calling you. My wife, when she retired, she realized it's the same thing. She don't know, her friends are not calling her anymore. So at least she knows my call when it's ringing and her call, and so you put special bars, because you know who is calling you. So those 5 things. Before I go to the next realities, I want to see whether you are good students. Number 1, what should you have? Medical cover. Number 2, liquidity, cash. Proper cash, they're not a building. Those ones who sometimes you can't sell. Sometimes you think of Hilton Hotel. What is the value today? Many buildings in the town have just gone. You know, yes, in your balance sheet you have them there, showing how they are. So you have to think about it. This sometimes becomes a problem. Number 3, don't go into retirement with a loan. Please try and pay all your loans if possible. Just start afresh. Number 4, get something to do. Yes, business, something you can occupy. Your passion. Passion can be something that maybe your parents used to force you to do, and then you didn't like it, but you did it, and you did it very well. Now you find that when you're out there, you are the only person who can do it better than anybody else. There are small videos I'll show, but I don't know if they'll have time. Passion comes out of many things that you do, and you do it without pressure. You don't even do it for money. Something like I teach, not for money, just to impart knowledge to students and do those board dynamics, not for cash, but at least it keeps me going. When I come here, I talk to you, we share during your free time. So, and then number 5, very important, close to your family. Okay? Because, you know, you don't put God in numbering, and God, you know, is always above all of us. That one is the most important, because we are very close to our Maker, so that one is a daily thing. But these are things that you can do. Then you can add others that you want, okay? But let me tell you some things which are realities in retirement, which are part of it I've already mentioned, but then it's good to. I've talked about, you know, at that age, this age of 65 or above, we men, our body structure changes, okay? We are not as active as we used to be when we were young. So the wife should not expect you to be that strong man she knew. And what happens, and that's part of what I teach when we do this course, we teach people about psychology and what happens in medical. That at that age, when we were young, when we went to play football in the playground and we feel like you want to shoot somewhere, you just go to a corner and you shoot. And you have no problem. At my age, you go to the bathroom, you're all holding the wall like this because it's not coming out. You have to pressure. It's not that easy because of the body structure changes. So you are not the same. The same with the ladies. The man should not expect you to be the same lady who was as active as he was sexually and whatever. So you should not go and start taking Viagra out there. He will die. Yeah, it's something will cheat him that, you know, he has to go out there to get some very active. And because he knows he's not active, he takes Viagra. He just collapses and die there. It becomes a big challenge. So I always tell men, you're not like ladies always see gynaes, like very frequently. So it gives them a chance of all the time being checked. Men, we don't see gynaes. You should see a urologist. You ever heard of a urologist? Those are our gynaes. So if you have your husband, tell him to start seeing urologist early. He'll take care of some of those problems you think he has, because that's their job. I knew few. Magoha was one of them. There's another Dr. Mogere at Kenyatta at Nairobi Hospital, and a few others. Okay, if you go there, you'll find quite a number of men there. But you need a urologist because they really help you manage your cholesterols, your fat which is in your body, and they also be able to help to manage your libido. All those things is part of what they do. So we need to see a urologist just like the ladies do see the gynaes. It really helps a lot at our age, because you'll have definitely issues with urinary system, prostate, and such things. Then, by the way, how many of you have life insurance? Raise your hands up. Life insurance. How many? How many have taken life insurance? About 4 or 5. Why don't we have life insurance? And you're not the only ones, by the way. So don't feel funny. When I was addressing judges in Mombasa, when they had a whole session of Court of Appeal judges and all the judges were there, when I asked how many had life insurance, he's the current Chief Justice, and I've about 4 of them. The rest didn't have. Because we have this feeling that if you take life cover, you feel you'll die tomorrow, eh? That's the fear most of us have, that tomorrow you will die. But it's always good to express your wishes, so that at least somebody knows, like I was telling you, a lady goes, the following day everybody jumps into your bedroom, to a closet, they're all taking your clothes. Because you never gave any orders or how those things should be disposed. Because you should always have an exit plan. It's not there, these clothes of mine, maybe you donated them to, not somebody coming to choose. No, when you are there, nobody comes into that room. But that happened to a friend of mine. But when the wife died, that room became a beehive of activities. Shoes, nini, that was where the focus was. But if you had given your wish of how things should be disposed of, it makes it quite easy. The other thing I tell people, please invest in your children, not for them. They should not just sit there expecting that your money is theirs. I had a friend of mine who had a house in Upper Hill here, and the son of 10 years, when they were, normally, you take your children where your investments are. So they see. Then they asked, oh yeah, okay, this building, what's my share? He's 10 years. He wants to know his share. Then he started asking, why do you want to know your share? I don't trust my brothers. So you see the mentality already there that these assets are ours. And it happens even in Upper Hill, where some old man has refused to sell these houses government was giving, and the children are there, they always push, telling him, you sell this thing, Chinese will put up so many houses, we get so and so, and this kind of a thing. Because their focus is your wealth. Okay? And he has, so they wish you to die so that they can sell those properties. Because you don't want to sell because of your personal attachment to these things. But them, they want to dispose them off and share. This lady bought, the policeman who bought a house in Otiende Estate, and that house, he thought when he retires, that should be rent when he goes to the village. So he passed on. The wife used to rent the house for about 10, 15, 40, 15,000 something. So she used to receive that as her income. But the sons pushed her so much that there are no jobs, or this house should be sold so that we can get money and start some business. She gave in, sold the house, divided equal to all the children. She went to the village. Today, she's in the village with the boys. They finished the money got finished, they're back there. By the way, I always feel we actually lay down the boy child. Somewhere, we focus so much on the girl child. At the university I teach, 75% of my students doing masters or levels are ladies. The boy child disappeared somewhere because of lack of mentors along the way. And I think we are to blame for that. We have to see, and again, and the mothers also spoiled their boys. They push the girl child to do all the work. You are cooking, you are doing this, you are in school, you are doing this. When they come out, they are stronger. What do you do with the boy child? You give him a ball, you give him a computer, he sits in a corner, and he does his own thing. And you can say, oh, Papa, what do you want? Daddy, what do you want? No, Papa, Daddy, Nini. The boy is just, easy life. So in the wrong day, when he's 40, he's still staying with you. And he said, where do you want me to go? And even if you get him a house to stay, he'll be coming to take food from your house. Isn't it? These are realities. Because where does he go? Then he's used to that life. You buy a house, you give him a room, it has everything. Now you want him to go and start living alone. And I asked the boys in my class, what is the problem? They say, you people empowered the ladies and left us out. And the ladies are strong, by the way. If you see Gen Z's ladies can even hold a rungu and beat you up. So the other generation, Alpha, will be worse. So you must really take care of our boy child, even now, and see what we can do. It's something which is very, very important for us. Secondly, please don't be the gatherer. Because you become the gatherer, they become the what? The scatterers. Because they are not interested in some of the things you are doing. But we are interested in gathering. So don't be the gatherers. So we are the gatherers. They are the scatterers. I have friends who have hotels. The sons who are taken to the US, they have refused to come. So he wants them to take the business, they're not interested. They always tell him, you want us to suffer the way you are suffering. And they're not doing much there. They don't want those houses of yours, they don't want that land of yours. They're doing a few things on their own. So ladies and gentlemen, I can think I'm taking too much time. Let me stop there. Thank you and God bless you. Thank you. Sorry for taking it.
Thank you, Dr. Dundo. Please, let's put our hands together again. Dr. Dundo was a CEO. You are just an ordinary, like me, employee. How will your life be when you retire? That is what he was telling you. Instead of getting it from us, from Members Education, you got it from the right person. He retired as a CEO. How will your life be? That's a question that you need to go home with today. So thank you so much, Daktari, once again. And Chair, allow me very quickly to request the technical team to project the QR code so that we can just have a feedback to help us manage the fund. QR code, there are 2 questions that will be projected. Please give us that feedback very fast. The first question is, in what areas would you wish the fund to put more effort into? You can select more than one. We have healthcare, benefits, investment, general service delivery. You can pick more than one. The next question, are we done? Right, very fast. The next question is, I think is projected. Thank you. The next one is, which of the following services offered by the fund are you aware of? Income drawdown, this has been elaborately spoken about by the trustees. Additional voluntary contribution, AVC. Members self-service such as the mobile app, USSD, and the member self-service portal. Last one, post-retirement medical fund. They have been adequately explained right here by our trustees and our chief guest. So please give us that feedback. Right, as that goes on, I will invite, because of time, Steve Maduka to come in front so that he can give a few of the questions, just a few, because a number of them were answered during the DB time. I'll just ask him to give us just a few questions that can be dealt with by the chairman. Thank you. Thank you so much.
Thank you, Chair. Thank you, Joseph. And as you have said, I will just read very few questions in the interest of time. And the first question that we have is from Kenneth Anakoli. Kenneth Anakoli is asking if an employee on contract can contribute to the retirement medical fund. Kenneth Anakoli is an in-service member. These are questions that came through the Q&A feature of the Zoom webinar. There's also another question, Chair, from Gideon Otieno Dance. And he's asking why the DC fund does not carry out a member education and awareness program or activities, just like the way the DB fund does for its retirees. Why the DC fund does not conduct member education for its retirees, same way as the DB fund does for its own. Dance also had another question, and is asking if the fund is considering having an IDD representative in the Board of Trustees of the DC scheme or DC fund. Chair, if those questions can be responded to, I think that would be fine. Then we'll move to taking some few questions from the floor.
Thank you. Thank you very much, Steve. On question number 1, It is true. Hello, yeah, thank you. Currently, contract employees cannot contribute to the fund. The only contract employees who are allowed to contribute are those who were initially in employment, who were in P&P, permanent and pensionable. And later on, their terms were converted to contract. And in this case, we are talking about the managers. You remember, we had senior managers who were on P&P, and later on, they were converted to contract. So what we did as a scheme, we wrote to the RBA to request to allow us to have those on board so that they can contribute. We did get the approval, but when it came to now allowing contract employees to do the same, it was difficult. Why? There has to be, the argument that was advanced was for contract employees to contribute to the pension fund, it has to be done jointly by the employer and the employee. And that is where the difficulty was, where the employer cannot contribute, make its contribution for contract employees. So it's until that time when the employer will accept, that is when that will be accepted. But for now, what we are trying, and most of you know, is to try as much as possible to have all those contract employees being permanent and pensionable. And from the other position I hold in the union, I think there is already an effort towards that. Once you do that, you have to review the trust deed. That is our constitution. So we were able to do that for the senior managers. Now we're on contract. Why doesn't DC Fund conduct member education for retirees? I want to confirm that the Secretariat, together with some of the trustees who have been going around on member education, we've specifically been carrying out training on ID. For the retirees, the only area that we narrow and focus on is IDD. It is IDD, and we'll continue doing this. The other last question was having a representative at IDD. This is a matter that we already seized off as a board. And as I mentioned earlier, with a fund value of 1.6 billion, then we are now moving to a situation or a figure that will require us to have this as a standalone. And this will be very soon, in the next 1 year, 2 years or so. So we are going to have 3 units, the DB, DC, and IDD. And that's why in my speech I mentioned about IDD. We intend to register it next year. Once it's registered up and running, then we are going to establish a fund for IDD. How, the structure, the shape that it will take, I think it will depend. But essentially, obviously representation, a big chunk of representation, or not even a big chunk, I think the entire representation of IDD will now be from retirees, and maybe a few of the existing members who are in DC and contributing. I think that is it, Steve. Yeah.
Chair, in the interest of time, the many other questions that we have gotten through the Q&A will be responded by the Secretariat, of course with liaison with the trustees. Chair, we have also received some compliments through email, WhatsApp, and text messages. But in the interest of time, we'll not read all those many compliments, including the one from Daniel Wadeto. So at this point, Chair, I would request that we take some few questions from the members that are present here. Simon is going to assist in moving around the mic together with Ian and Nehemiah from the other side. There's somebody behind there. I think that's Phyllis.
Yes, good afternoon. God is good, and all the time.
Yeah, I came here to represent my dad, who is 85. And the doctor who was there, he talked almost about, if I'm not out of the topic, about those people who are working. I'm talking about this scheme of medical scheme. He talked more or less about those people who are still working or who are almost to retire. Now I ask, now my dad is 85. And there's this about NHIF, where we are a bit confused, and about something called SHIF, and also about something known, because I come from Kiambu, Wamatag something foundation. Now, my dad, can he join this scheme because he's still getting his pension? Or maybe because I found the limit was like 59 years. Does it mean now those people who are above 60, because they are almost about to die, they cannot join this scheme, or what about it? Yeah, thank you.
What's your name, please?
Joyce Gatogota.
Oh, right. Simon, pass the mic.
Good afternoon. My name is Cyrus Kimani. I'm an in-service member. I am referring to the annual report and financial statements, page 16. There is a graph on return on investments. And I was just looking at the performance of members, our money. The last 2 years, it has not been encouraging, negative 3.1 and 0.2. And we understand the macroeconomic environment has not been good. And apart from those external factors that have affected our performance, because I've seen the fund as indicated down there that it has put in strategies to turn around these poor performance for the last 2 years. So my question was, what are these strategies? Thank you.
Thank you, Cyrus. One more, then we can have trustees respond. Can pass a mic here. It's already 2, so we need to be so straight to the question that we have. Our lunch is beckoning.
Good afternoon. My name is Elizabeth Mugo. This medical cover, will it include the dependent who are below 25 years?
Thank you, Elizabeth. Trustees, I think we can have those questions responded to.
Okay. Madam, the representative of the 85-year-old, I wish we had the means and the capacity. Unfortunately, it's not possible. It is not possible because you're in DB scheme. You can't join, I think that was a question, Steve. It's not possible to join the DC, the IDD, so it has to remain the way it is. So ours is only to try as much as possible to make sure that we invest well so that we continue getting, the mzee continues getting the pension. Unless I didn't get what you're asking, moving to which, Steve?
Yes, Chair, the father, who is still a pensioner, maybe can join the current arrangement that we have for the retirees, where we can pay the annual premium on his behalf and recover in 12 equal installments from his pension. That's the only option that is available to him, and that is from the DB side.
Yeah, so here, madam, I think we are limited to that. On, is it Cyrus? Cyrus, I think you've raised a very pertinent issue. I would have allowed the fund managers to take up this, but I think in the interest of time, and this, you ably presented the performance for the last few years, and specifically for the last 2 years, the performance has really been wanting. Our room, leg room, as trustees, is limited, and that is why ours is to develop a policy, and the fund managers are the ones to ensure that that's investment policy, they follow it to the letter. And the macroeconomics, whether external or internal, the only internal that comes in for us is prudent management in terms of administration. But you will agree with me, the way the fund is run, most of this service we outsource to the fund managers, and we keep them on check. And for sure, if you are in DC, you must have heard that in the DBAGM, it was presented by one of the fund managers. We do a survey. Zamara does a survey. And last year, the schemes, the best scheme did, is it 0, we are told 0.4? Yeah? Averagely. So, and even when we did negative, we were still a bit better. So as long as the macroeconomics remain the way they are, then we may not even do much. I think that is, in terms of RBA compliance who are represented here, we've tried as much. In fact, in all the asset classes, for the DC scheme, we have adhered to that. So let's pray the macroeconomics changes. Let's pray that the strategy that we put in place, what we are saying, the strategy is really making sure that that strategy we put in place is up and running. I think there was one, Elizabeth asked about Steve. Did you capture that?
Yes.
Maybe you can respond, that is your area.
Yes, Elizabeth was inquiring if a member who is joining the pre-funded post-retirement medical fund, that will be possible. But of course, the more beneficiaries that you place under cover, it means they are the premiums. That is possible. Of course, we started the other day, and more details about this post-retirement medical fund will be shared. There is a booklet that we already have, and maybe you need to get a copy. Thank you, Chair.
Thank you.
Yeah. So maybe 2 more questions, then we can have the rest of the questions being forwarded to the trustees through the info account that you already have. So from that side, and then finally to that gentleman. Yes, please.
Good afternoon. Mine is actually an encouragement. I am a retiree. I'm in my 6th floor, room 2. Now, I want to encourage those who are still in service, because when I left, I'm actually enjoying my DB benefits and my DC benefits. And I'm very happy I remained behind to listen to this, because I've learned so much. I thank you, Chair, because you said that those who went to other farms, they can come back after 5 years. I can't wait. Because I went to another farm, insurance farm, Nakimenilamba. So I want to encourage those who are in service. By the time you are retiring, have all the information. We are told information is power. Don't just go to take your money to any insurance. We have, there's a guy who, this officer has stood and told us about Gene Africa. I wish I joined Gene Africa and remained in KPPF, because I have got my own challenges there. So I want to encourage those in service to stay in KPPF. Okay, I'm not hired by them to do advertisement, but I know what I'm saying. I know now the weaknesses that are out there. I fell victim of those insurance guys who come, especially when, I don't know who tells them that you are retiring. You find them on your desk. So I fell victim. And I used to meet them outside the house at a hotel there at a cafe. And they enticed me, and I took my money there. So I am now a victim. I wouldn't want anybody else to be a victim like me. In fact, I can't wait those 5 years I come back to Gene Africa and return my money there, so that I start earning the benefits. So stay home. I'm coming back home to KPPF. I had gone to an insurance where I suffered, and I'm not alone. My colleague here, she is suffering the same. Maybe how you can help those retirees who are suffering out there. Maybe do an SMS, ask them, are you suffering in an insurance firm, and you want to come back? And then you advise us. Because me now, I can't come back until 2028. So I have to suffer for those other years remaining. So mine was to just encourage you people. Thank you so much.
Thank you. Thank you. Thank you so much for that unsolicited support and promotion of our income drawdown fund. It's a game changer. It's a solution. Yes, from across?
Yeah, my name is Geoffrey Wavero. I would like to ask one to the secretary of the fund and to some of our investors. I have two questions. One, can our custodians and those who are in investment management tell us as members, specifically Umeme Plaza imetupatia pesa ngapi? Because we are crying, we are doing bad, and I know that asset is good, but returns are almost zero negative. Second, I have been coming to this AGM for the last like 5 years, and it seems there are de facto trustee members. Can we be told if there are trustees who are permanent members? Because there are some who are ever there. Some change, some are ever there. Can we be told why as members?
Thank you, Geoffrey Wawero. I think we had agreed those were the last two questions that we are picking. And trustees and the trust secretary will respond. Thank you so much.
Okay. Thank you. So I will take these two questions, Chairman. So thank you, Jeffrey, for those questions. So number one, about Umeme. So Umeme is in DB, eh? So it's not in DC. So that's a question that probably should have been asked during the DB. The only property in DC is Kirichwa, which is currently under development. But nevertheless, so in terms of, so there is already an initiative around the Umeme and current, and the initiative is to be able to dispose the two properties. We've gone through a journey. I think Umeme we had started to see whether we could redevelop through a joint venture because of what you saw in terms of the allocations levels. So in DB, we no longer have any room to be able to put in any additional funds. And therefore, the only options is to be able to exit. And that exit is what we are currently undertaking. So that's on Umeme. On the issue of trustees, we are heavily regulated. And the regulator is here, so he issued regulations. There are also guidelines that are issued from time to time. And there is also the RBA Retirement Benefit Act that governs all these aspects. So as far as our scheme is concerned, we are in compliance and we are adhering to those regulations. So elections fall due as members finishes their terms. So I think those are the two questions, Mr. Chairman.
Okay, I think as indicated, maybe, Madam, the one who was so happy that the 5-year window will allow her to come back. I think I need to clarify. What we meant by 5-year coming back is if you invested in a different income drawdown. Currently, we have that unit within us, the income drawdown. And the law now allows those who are contributing, who are in the income drawdown, you now have a window. After 5 years, you can move to another income drawdown. And if by the time you're also exiting, you decided not to invest in an income drawdown, you decided to go to another income drawdown, and you realize that income drawdown, as you rightly put, but in this case it's insurance, you decide to come back after 5 years, we allow you. But, and let me emphasize this, if you went to purchase an annuity insurance, the law does not allow you to come back. You will remain insurance forever. I must state that. That is the law. Once you've gone to insurance, you know, you will sit down with the insurance, those insurance guys who are buying for you mandazi and tea. You will sit down with them and agree with them. There are many models that they will present to you on what you will be earning on a yearly basis. They will tell you your pension will be escalating. They will tell you, we'll give you an average of this amount for a whole year, and that is it. So I wanted to clarify. If you want to purchase an annuity with insurance, it's unfortunate that you can't come back. The Lord does not allow us to have you back. That is the situation. And that is why I want to look at you guys in your eyes. And this is what Madam was saying. Please, those insurance guys will come with a lot of goodies. You can hear now, Madam, what they are going through. So let us remain in our pension. You know us. Some of us, even the positions we hold, we mess the pension, it will mess us even the positions we are holding. And that's why we are religiously taking care of this pension fund. We know what it means. So that's what I wanted to clarify. Secondly, Mr. Odundo talked about what is called income. And thank you very much, Dr. I don't know, he has left. There is the income. He talked about when you retire, you will get a paltry 10% of your last salary. He was calculating, kama ulikuwa na 1 million, utapata 100. But I want to give you some comfort with us. Our income drawdown, at least, Steve, is a bit better. If you contributed well in DB, you should get around 20%. DC now is around 29%. So if you combine the two, when you retire, you should be able to get around 45%, or even up to 50%, depending on your salary, the way how you are earning. So our replacement ratio relatively is good. That means if you live with 200,000, you're almost guaranteed of almost getting 80, 70, or even 100,000 per month. That's what I wanted to give you comfort and assurance. And that is why, as trustees, how do you make sure you get a better income drawdown? You must have a good salary. You must contribute, and this is what one of the trustees was saying, additional voluntary contribution. In fact, civil servants are contributing 7.5%. Across KenGen is contributing, employees are contributing 10, the employer is matching with 20. So every month for KenGen, 30% of your salary goes to the pension. But for KPLC, you are contributing 5, the employer is contributing only 10. We are trying to push the employer to improve, but the employer can only push the increase if you also increase yours. But as we push the employer, because the financial situation, that has been the argument of the sponsor, until the situation improves, go for AVC, additional voluntary contribution. Contribute more. When you retire, you will get a better income replacement ratio. And with the issue of post-retirement medical fund, I think you've been told, I don't want to add more. Members, let me, as we conclude, you are now requested to note the annual reports that includes the chairman's report, trustees' report, investment report, and the audited financial statement as having been received and adopted. Ladies and gentlemen, there being no other business, I would like, on behalf of the Board of Trustees, to sincerely thank, I repeat again, our sponsor for your continued support, all our members for attending and actively participating in this AGM, and all other occasions where your participation has been sought. Number 3, our service providers for their professional support. 4, the RBA, as usual, for continually promoting a conducive regulatory environment for retirement benefit schemes. And finally, the Board of Trustees and the CEO and the Trust Secretary and the Secretariat for their concerted efforts to promote and protect the interests of the members throughout the year. I now, as your chairman of DC, declare our 18th 2024 AGM officially closed. God bless you all. And in this, as I hand now, I request, before I call a volunteer to close with a word of prayer, I will hand over to Joseph. But otherwise, thank you very much for the remaining part of the day. I wish you all the best. I wish you a good weekend, and and also for the remaining part of the year. Mungu awabariki. God bless you all. Asanteni.
Thank you so much, Chairman. Can we put our hands together for the Chairman? Another clap for our trustees. And another one for our members, esteemed members, who've done us proud. And the last one, but not least, for our service providers. Thank you so much. Lunch is going to be served at Nyama Ranch. I don't know whether it is Nyama. It is the name Nyama Ranch. Nyama Choma will not be provided, but because of a pastoralist, we are going to provide. So Nyama Ranch, please, after this. So I want to invite Trustee Imelda. You can come in front and pray with us and also pray for food. Thank you so much, and God bless you.
Please let's stand up for a word of prayer. Let's pray. Heavenly Father, I want to give you thanks. Thank you for this day. Thank you that you've had 2 successful meetings. I want to thank you for bringing everybody safely to Safari Park. So thank you for our pension fund, for the success we've experienced in the past 1 year. And we want to pray that you go ahead of us as we plan for the coming period. I want to thank you for everybody here. Pray that you bless each person. And as they go home, pray that you give them safety and mercies. Father, we have food before us, which you're going to take. Pray that you bless it and bless our time together. We give you thanks for everything, and just need to pray and believe. Amen.
Power Choir, please, you can come in front and give us a number, but please, let's clap for them. They have done us proud. That was indeed good. Thank you so much. Give us a number as we walk out. The Secretariat will lead you to where we're going to have lunch. Thank you.
Guidelines of 2018.
This is an arrangement whereby members can save while still in employment for medical care in retirement.
The fund was established by the trustees, of course with concurrence from the sponsor and the Retirement Benefits Authority. Contributions to the post-retirement medical fund, I would say, will be dependent on one, the members' keenness in securing their post-employment years. Number 2, their financial ability to make these contributions. And number 3, the target medical benefit that they are keen on enjoying once they have retired.
So there are different modes in which a member can access the benefits.